up at the end of the year. It's kind of like, life is like a roll of toilet paper. The closer you get to the end, the faster it gets. Well, it's the same thing with, the end of a year too. It just seems like to me, it's like, you kind of like about November 15th to about January 15th is typically a blur. Hindenburg omen, yes, exactly. So, all right, so let me grab this here. So the good news is that although things are going by really fast, I'm super excited to share with you today. And it's kind of strange because on the one hand, when you think about stock patterns and stuff like that, I mean, it's not the sexiest thing in the world. And in terms of patterns and things like that, I mean, a lot of times people will just kind of think like, oh, okay, so that's a pattern, right? That's like a wedge. I got it. I don't need any more information on that. And, if it's going to go this way, great. Then, it's going to keep going. And if it's going to break down here, then great, it's going to keep going. That's super easy. Why do you even need like a class on that? And the other thing, and this is the kind of stuff that'll run through my mind too as we're doing a class. And it's like I always, my thought pattern too is that, for stuff if it's available for free on the internet, then it's not something that we really need to put into a class, right? Thomas, I appreciate it. That's great. The other part of this, though, is that, this is, and it's not hard to look up, if you type in chart patterns on Google, you're going to find, a lot of stuff and things like that. But, what I've found is always, it's kind of like the longer you do something, the more you kind of see how it all ties in together. There really is no kind of separation of, this is a triangle and that's it. It all ties in together. And the more you increase your own knowledge on little bits and pieces of the markets, and the more you learn that it's all kind of one big connected thing, the easier this gets. And it makes me realize that too, especially like, I go back, I have journals going back to the 90s, and I go back and always look at times when it's like, wow, trading then was really awesome, or wow, this trading is really tough, and you kind of go back, and it's always going back to the basics. When you're on, kind of in the zone, so to speak, focused, you are tied into everything, and it's a little more just kind of just going with the flow. And anytime it happens where it's like I lose that, a lot of it comes back to what we're going to be talking about today, and it's chart patterns and understanding how they work and how they drive the rest of the markets. Okay? All right. So, so just out of curiosity, just kind of a show, you can just, do a quick answer, type in or something like that. How many of you here would consider yourselves like absolute beginners when it comes to patterns? I always like to get a sense of kind of the audience and stuff like that. Beginner, medium, beginner, well aware, hey viral, somewhat more. Okay, so definitely actually a pretty decent amount of beginners to intermediate. Okay, IBD experience, great. I like the IBD patterns. Don't really use patterns. Okay, Mark, you will change that. You will rethink that at the end of this. McGee and Edwards, yep. Okay, so all right. So what we're going to do, and the thing about it is that there are. And for those of you that are interested too in kind of, after this, if you really get interested in kind of, really diving into this, kind of a Bible of patterns is a book by Edwards and McGee. Edwards and I think it's McGee, right? I mean, it's I think it's on its like 10th edition or something like that. But I'll show you guys, different things and stuff like that too. But, the goal with this is that, this is kind of a, hey, it's a short 4-hour class. And it'll give you the, kind of tie in a lot of information that works with a lot of the stuff that we already do and just makes it that much more powerful. Okay? All right. So these first couple of slides, I'm not even going to really go through because Daryl did such a great job going through that already. The main thing I would say is that, in something like this, you're going to get a lot of information, and just kind of sit back. Again, you don't have to frantically write stuff down as it's being recorded, but just think of those aha moments, and it's going to be different for everybody. It's like, okay, that's awesome. I love this little graphic here. Ah equals ha. And the other thing, again, with questions is that if I get on a roll, I won't be really so much looking at questions. And a lot of times, too, what will happen is that having done this a lot, I kind of get what kind of questions people will have, and will lead into that. Okay, and so initially, one of the questions I always get is, well, where should I place a stop? Well, I'll answer that when we get to the part about, trading plans, stuff like that. Oh, that's great, Don. So Don just said, hey, I understand patterns pretty well. My problem is filtering out the 10,000 stocks and that dozen or so that are set up to be bought. Perfect. We'll cover that too. Okay. So be patient. Good things come to those who wait. There's a saying I heard once that says, patience is a virtue, but impatience brings greatness. And sometimes you got to get your arms wrapped around. There's an affirmation for everything. Okay, and in general, it's okay to log out of the software, but I wouldn't, if you do it more than once, it's possible you won't be able to get back in, so just be careful about that. We will take 2 breaks, about 10 to 15 minutes each. We're not going to break for lunch, but we will take 2 10 to 15-minute breaks, and of course, we're going to go for 4 hours. So what we're going to cover, how to identify high probability stock trading patterns, especially what to look for as we head into 2015. Step-by-step rules for trading these chart patterns, being able to spot major turns in the market on multiple time frames, and how to identify what hedge funds create a pattern to lure you into a bad trade, okay? And then how to use chart patterns as an early warning system, and of course the best ways to find and scan for high probability chart patterns, all right? So let's dive in. And the first thing to understand about patterns is that they apply to every asset class, okay, and every time frame. So add to that, and time frame. And here you can see just individual stock symbols, the euro, et cetera, et cetera. I mean, it applies essentially. If it can be charted, patterns can be put in place to it. If you've looked at Bitcoin, you can chart Bitcoin and see patterns that develop and that give you kind of a clue as to what Bitcoin is going to do. Let's see. Yesterday's that's good too. And actually, someone said, hey, yesterday's profits and Priceline and Netflix, the call credit spread justified payment for the class. And we'll look at stuff like that too, because it's an interesting tool for actually setting up credit spreads as well. So the nice thing is, the more you understand about patterns, the more you can tie that in with the stuff that we're doing already. It just gives you an edge, and every little edge hurts. That's a different conversation. Every little edge helps. All right, so this will be a quick review from the webinar that we did. So chart pattern basics. In many ways, chart patterns are simply more complex versions of trend lines and support resistance. Okay. Everybody knows what a trend line is. Everybody knows that, hey, if we come down here and we trade and we go up, this is support now, and so the next time it comes down, it typically will hold. Okay, so that's support, that's trend lines. Patterns are when you get a combination of trend lines and support and resistance working together to form a distinct pattern that has a high probability of doing one thing or the other based on a certain checklist. Okay. And part of this too, which I find is really, really good, is being able to recognize patterns as they're developing, and that can be very powerful too. Chart patterns are the best way to make both short and long-term forecasts, provided you know what to look for. Indicators combined with the right chart patterns have the best chance of making money, and charts are so powerful that hedge funds will actually create them on purpose to sucker people into trades, and obviously we're going to spend some time on that. Again, that sucks if you don't know about it, but if you do know about it, it's just part of the game. When you're playing tennis, you understand the rules. If it goes outside the white line, that's out, and you lose that point if you're the one that hit it. All you got to do is understand the rules and you can play the game. If you don't understand the rules, then it's, it can be an exercise in futility. Now, this is one, and we're going to actually, when I showed this at the webinar, I didn't show what the symbol was. I don't know if you guys figured it out, but we'll look at it again in a little bit here. But, there's patterns, too, that a lot of times are easy to spot, okay? And this is kind of a classic, reversal head and shoulders, very powerful pattern, and it actually broke its neckline, right? That is a super, super powerful, high probability pattern, and hedge funds know that, okay? On something like this was deliberately set up to try to suck in people so that they could use that opportunity to short more of this, okay? And you can see here, like this is the chart. If you guys haven't figured out what this is, it's USO, but we're gonna look at this again in a little bit with some additional stuff on it. But this is a very common thing where the idea is, if something just goes straight down, the hedge funds, if something's going to go straight down, they want to participate in it, and what they can do is sit there and just kind of work it a little bit and suck in more money, okay, meaning like, oh, wow, this is support, I'm going to come in, we're going to buy it, because if there's a lot of buyers coming in, you can sell a lot, i.e. short a lot, and it's not going to move the market very much. When you start shorting a lot and there's no buyers, that's when things just crash, okay? And hedge funds know this. They write algorithms that trade for them. A lot of this stuff isn't even done by human beings anymore. And that's where it becomes important just to understand the game and being able to recognize what's going on. And the good news is it's actually not that hard to recognize what's going on. Is the neckline always inclined or is it horizontal? It can be both. It can be both. Patterns are layered. Yeah, we'll dive into some of that. We'll dive into some of those questions and stuff too. And that's of course, oh no. Oh, by the way, so here's I was actually talking with a developer last night. So I always find if people are into something, I always like to find out what they're doing. And this is a guy who develops. Our kids go to school together, and he develops like 1,000-acre tracts, like in San Marcos and San Antonio and stuff like that too. I mean, just kind of crazy stuff. Really fascinating, kind of fascinating. But what he's seeing now is he's on a lot of call sheets, for oil and gas. Like he does oil and gas investments and things like that as well. And his phone is exploding down here in the West Texas or Eagle Ford Shale, with investors saying, hey, now's a good time to get in and lock this in. They're trying to raise cash. And the reason they're doing that, because if oil stays below $60 a barrel for another 30 days, they're going to cap off the wells. And what they're trying to do is get all the investors that they can now and grab the cash. Now, it's not a ripoff. It's what happens is when they cap the wells, they literally just cap the wells, and they'll wait for 5 or 10 years until oil comes back up again, and they'll open them again. So if you buy into it, that's fine. You just have to sit there for 5 or 10 years until the wells opened up again, assuming oil goes back higher. But the fact that they're scrambling to bring in as much cash as possible is just a huge red flag that, hey, at that moment in time, it's when these firms are actually hemorrhaging money and if the countdown clock begins. So it's kind of interesting, and I think oil is going to keep going down, and we'll obviously look at that. But it's it's kind of that boots on the ground stuff that I always find really, really interesting. Okay, so, and the other thing to remember about chart patterns too is if you start to understand this in a way that you actually look for chart patterns that have the potential to fail, because those can typically be more powerful. Okay, when you see something like this, and it's like, all right, I'm going to buy this here, and it's going to continue going. If it breaks, it's typically going to be a very, very nasty move, okay? So if you think about it, during this time here, if you bought here, you could still hold on to it here and be flat if you bought the stock. Of course, if you bought options, you'd be underwater, right? If you bought the premium decay. Yet here, in 1, 2, 3, 4, 5, 6 days, and remember this number 6, okay? It's a very fantastic move and very, very appropriate for trading options. Okay, and the question is any clue this happen, assuming I could spell that right. So knowing this will happen is always tricky unless you, of course, know what to look for. So the other thing with patterns too is that, you know, hindsight always seems like to be 20/20. So here's two similar patterns and almost fairly similar, you know, price action. You had down move here you got a wedge, and here you got a wedge. I mean, I don't know about you guys, I would call that the same pattern. And yet this one broke down and this one broke up. Okay, and it seems kind of, maybe on the one hand it's kind of random, but on the other hand, the question is, you know, what to look for, and knowing what to look for, that's going to tell you and give you a heads up that, you know what, this has an extreme high probability of going higher, while this has an extreme probability of going lower. Okay, and a squeeze is helpful, but, you know, a lot of times you're going to have patterns without squeezes, so you want to also understand what's going on there. Okay. So I love this frustration when you've done your best but you still fail, and this is great. You know, this guy's digging out of prison. He's going to make it, and right into a sewage tank. And that's tough, and that's, you know, those last pieces of the puzzle, if you don't have those, can make it very frustrating. Oh, what is a squeeze? Okay, so I always assume when we're doing this too that a lot of times people will know what a squeeze is. If you don't, that's fine. We'll spend like 6 minutes and we'll review that, okay? Yet, with the right tools, once you're able to identify patterns, the key from there is to assemble tools to give you an edge as to if this pattern is going to be for real and strong, or if it's going to be a complete fake out, all right? And it is important to realize that the larger the time frame, the larger the move, okay? And that's, on the one hand, kind of common sense, but if you're looking at like a 1 minute chart, you know, and it's got a pattern, then the results of that pattern are only going to last like 6 to 12 minutes, right? Versus a monthly chart, the results of that pattern could last 6 to 12 months or even longer. So the good news with all this, though, it is actually fairly easy to tell if a pattern break will result in a larger term move or a shorter term fake out move fairly quickly, no matter what time frame you were trading. And what I want you to remember here, and I want you to write this down, is the number 6, okay? Now, don't write it down 3 times in a row, just write it once. And this is kind of an idea in terms of just to kind of give you an overall idea of the power of these patterns and how to measure them, is that essentially if something like this breaks down, so here's Tesla, and it broke down, and basically if you can get 6 bars in a row of a continuation move, then this is something that is typically going to result in a much bigger continuation move. Okay, so here we go. It falls, you know, whatever, maybe whatever the setup is, maybe you bought puts here or whatever it was. That's something we'll talk more about later. So you get 1, 2, 3, 4, 5, 6. After 6 bars, I mean, you are just rocking to the downside. Well, guess what? At that point, the chances are very, very strong that this move, even within some consolidation and some retracements, is going to continue going lower. Okay? So that's kind of the first thing to remember there. And of course, it doesn't matter if that's an up move or a down move. Okay, so here's Apple, and here's a daily chart, and you get this breakout. Okay, and you go 1, 2, 3, 4, 5, 6. Wow. At this point, you know, a lot of times people kind of, you know, they're taking profits and they want to buy the pullback, and then when they do that and they take their profits, and then they can't just like watch it anymore. It's like, oh my God, I got to get some more of this, and so they load up here. And then, you know, especially if you're buying out of the money call options here, through a normal consolidation, you could lose all your money on that trade before it continues. Okay, and so part of this is recognizing, one, when you have a strong pattern, okay, and how to manage that trade. So that's going to be a component that we're going to focus on later. Okay, if you've got a strong pattern, how do you manage that trade? But conversely, it's being able to recognize a weak pattern immediately. Now, on something like this, for IBM, here's a nice, beautiful, powerful setup, right? You break out 1, 2, 3, 4, 5, 6. You know, on the 6th bar, it's actually lower than where it was here. And typically on something like that, even after the first couple of bars, you can recognize fairly quickly this is going to be a failure. Okay. Now, good news is I'm going to show you some tools to recognize that this actually has a high probability of failure even before it triggers. But if you're in a pattern and it fizzles out, you know, within that 6-bar period, get out. Okay. Don't hope that it's going to continue. That's a sucker play. Okay. And it's okay to, you know, cut your losses. You might even reverse and go short if you want to, but that is imminent failure, okay? And if you look at this, but most failed patterns look about like this. This is kind of the classic suck money in play. And, you know, you break out, there's the, you know, buy it, and then this is where kind of people get chased. And then when you see this failure here on bar 4 and 5, so you got 1, 2, 3, 4, bar 4 kind of fails. That's a huge, huge, huge red flag on these, okay? And so just kind of keep that in mind, number 6, number 6. So the bottom line, of course, is that there are a lot of patterns, okay? And the key is not to get overwhelmed. All right, you don't need to know them all. I'm going to cover some basic ones today and some specialty ones. In fact, let me make a few notes here off to the side. I make notes too based on some of the questions and things like that I see. So we can cover those. And I love today, I don't know if you guys, when you stare at computer screens, today I forgot my, couldn't find my glasses. I'm sure the kids have them somewhere. But it's like you get this like nice kind of itchy, watery eyes. All right, let's see. Managing. Oh yeah, no, they're always taking this stuff, the kids. Okay, so the key with this is not to get overwhelmed. You know, because if you go and you look up at you know, you look, the Edwards and McGee book, I mean, is huge. This, in fact, let me look and see, because it is a book I actually recommend if it's something that you want to dive into, but it's really something that you want to be careful of because it can be very easy. I've got it here on my shelf, but I'll bring it up. It can be super easy to kind of get overwhelmed. So if you look at this, you know, Edwards and McGee, let's see if that's the one. There it is, this one. I was trying to see if it showed how many pages it was. There. So you see this 782 pages. So I mean, that is a monster, monster, monster book. It's awesome and it's great. And even if you just want to get it and just dive, you know, get a little bit more depth of knowledge in terms of the patterns that we cover, that's great. Okay, but you know, you don't want to get analysis paralysis either. So what we're going to do is we want to focus on the most powerful patterns and then tie in everything that we've been talking about in terms of, is this for real? Is it going to be powerful? Is this going to be a fake out? Is this hedge funds phishing, you know, and sucking people in? Okay, and then combining that with key other setups that we use. So the first thing we want to do is just dive in and make sure that we're on the same page in terms of some of the key patterns, but also a part of that is just kind of knowing where to find them. And so one of the best sources out there, and I always try to find free sources, and FinViz, and I've talked about this site before, they have an awesome free scanner. Now, there's an elite package that gives you a little bit more flexibility, but honestly, you don't need it for this, okay? So if you go to finviz.com, and you can go there right now and look, and you're going to go click on Screener, okay, and then when you do that, you want to come over here and click on Technical, all right? And then you can just kind of come over here and click on pattern, all right? And then from this drop down, you're going to see all these different kinds of patterns. And what's nice about this is, and someone had said earlier, it's like, wow, how do you go through 10,000 stocks? Because patterns, a lot of times, they could take weeks or even months to set up. And, you know, during this period, you don't want to sit there and just spend 2 months watching it. What you want to do is you want to get to this point in time where things are getting narrow or different action steps are about to happen, okay? And that's what's nice about something like this, is that it's picking up more mature patterns. And otherwise, mature. Because you want to look, from a trading perspective, it's the mature patterns that are going to give you the most bang for the buck. And the way these filters are set up, they're only going to give you the most do that. Oh, and that's good to know. So Roy is just saying you cannot export on the free version anymore. I think the premium version is like just a couple $100 a year. So, but it is useful. So keeping that in mind, then, so like I ran a couple of scans here at the end of the day on Friday. So here's that same screen, and now I just chose head and shoulders. Okay. Now you can filter by market cap and stuff like that too. I don't mind, because all I do then is I just sort by volume. Okay. And you really want, I mean, there's going to be a lot of stocks here that are trading like 100,000 shares a day or less. Just do yourself a favor and get rid of them. I don't look at them. I mean, you can see like SKH, that's a $20 billion company. That's a big market cap. But it only trades 72,000 shares a day, okay? What we're interested in is, you know, market cap, not a huge deal. I mean, you've got Tesla, which is a $25 billion market cap. CTRP, it's a $6 billion market cap. But the thing is that they've got volume, okay? And that's important because you get a more natural reflection of the marketplace versus something like this where one buyer can go in and, you know, really kind of change things up. And it doesn't mean that patterns here aren't good. It's just that if there's 10,000 stocks, there's going to be plenty of opportunity in this playground, okay? So generally what I'm looking for is, you know, minimum daily. I always like to say like 1 million and up is great. Will I trade something that only trades 500,000 shares? Sure. I mean, CMG is a classic one. That, you know, that trades like 500,000 shares a day. That's fine. But just stay away from, you know, 70,000 shares and stuff like that. So what's interesting here is Tesla now here, it came up with a head and shoulders. So if you look at this, I mean, it's pretty clean, but it's not like what a lot of times what people picture as the perfect head and shoulders pattern. You know, like the perfect head and shoulders pattern. You know, kind of a lot of times people just think it's always going to look like, you know, kind of like that, and then, you know, there's kind of this nice neckline and then it breaks. Well, it's usually not that clean. This is more normal. So you got kind of a, you know, think of it as kind of someone kind of straddling a mountain, for lack of a better term. But this represents specific investor mentality, a specific amount of buying and selling and panic and fear and greed, and it's helpful to understand that. And we'll go through this in more detail, but what you're looking for here is the moment in time when something like FinViz recognizes this as a head and shoulders, okay? And it didn't recognize this as a head and shoulders pattern until about 3 weeks ago. So all this stuff is happening, but once it's a confirmed head and shoulders, boom, it comes up in here, and you can do that. And so I find that that's useful just to see which stocks are setting up. You can get the volume in here, which ones are doing these powerful patterns that we'll be talking about today. All right, so that's Tesla. And then here's another one, and this is a stock that we've traded before, FireEye. And again, this is the free scanner. And in this case, I did triangle descending. Okay, it's also one of my favorite ones. Sorted by volume. Okay, I don't even care what these are doing. Although I do like this one, IRBT. That's an interesting one. But here we go. I mean, this is a very classic. You know, a lot of times people will see this and they'll focus on, wow, this thing looks great. It's so low. I wonder if this thing's going to break out. And this is saying no. This is actually a very classic continuation pattern to the downside. Okay. Now we'll go back and we will talk in more detail about a head and shoulders pattern. Okay. First, I just want to show you a few tools where you can find this stuff. All right. And in fact, let me, we'll do it live real quick. So here's FinViz. I'll use the free version so we can compare apples to apples. So I'm going to go to the screener, and I'm going to go to technical. Now, there are things here that you can kind of do and you can kind of tweak. I don't really do it. I don't find it necessary with this. So for a pattern though, I'll go through here and I don't use them all, but let's look for a head and shoulders inverse. Okay. Now again, I want to sort by volume, and we can see that the Mosaic company has a head and shoulders inverse pattern. Okay, so let's see if what we got cooking here. And then from here, what you want to do is be able to recognize them too. So, look at this and say, oh, okay, I mean, that's, maybe it's a little steep, little deep, et cetera, but you can see as a, from a filtering perspective, it's close. MRVL, Marvel. So that's kind of a little bit more of kind of a classic, kind of a head and shoulders here. So you got this, and remember, it's not going to bring it up until we get to this point, right? So you have the head and shoulders, there's the neckline, and now we've broken the neckline. So part of this too is you want to be looking at these scans on a regular basis, because this is still going to show it even after it's kind of pushed out like that, right? And we'll just kind of look at one more, Kate Spade and Company. A lot of people getting their Kate Spade on, and yeah, it's an interesting one too. So as you go through here and we learn about these patterns, you'll kind of see which ones, the ones that I found that head and shoulders, by the way, are the hardest for software programs to recognize. Some of the easiest ones are going to be, like, say, triangle ascending. Those are a lot simpler. So if we look at NTAPP, and then you can see just more of kind of this, more of that kind of a wedge pattern setting up. And then the other one was INSY. So here's a classic one. I mean, this is actually a nice, strong ascending triangle. And this may not have been something that we realized before, but it's like, wow, okay, cool. I mean, that's a very bullish pattern. There's a squeeze. There's some red flags here, which we'll talk about, and here, which we'll talk about. Some of the filtering tools that I like to use. But at least this is a way to kind of get you on that, because this is going through all the stocks, and it found, like, 58 that met this criteria, okay? And that's the kind of stuff with our, and actually it's less than that. There's only, if you're looking at stocks that are 1 million shares or more, it's only like 5 stocks. So it's a very simple way to quickly get the handful of patterns that are worth looking at, all right? Okay, so let's come back here. And okay, so someone just asked, how does the TOS pattern recognition one compare? I'm glad you asked that. So TOS also has one, and if you go to the, if you go here to, nice, cotton in my mouth there. So you can see this thing here called patterns, and if you check show patterns, okay, and then we'll on the next page we'll select patterns, but it will actually automatically draw patterns for you. Now on this one it's showing all patterns, but you can say, okay, I just want to do wedges. So I find this useful because then in a stock I happen to be looking at, it will point out a pattern to me, okay? Now I've had mixed success with it, some of the settings and things like that. What I've found is, well, first here, let me show you how to use it here real quick. And for them, this is kind of a newer kind of a thing. And there's Netflix. You can see all the patterns there. But if you come over here to patterns and hit select patterns, you can just say, okay, add all, and there you go. Now, one thing is that within each one, you can tweak it. Do you want just bullish or bearish or both? You can tweak the sensitivity. And if you want to get everything like really strong and different things like that, or weaker, and it's a little bit of an art form. If you go through and you do that, but it's okay initially just to use the default. What I've found is that sometimes I will type a symbol in and nothing will show up. And that part I'm not sure why. And I don't know if you guys have found that out too. That's just something that I found, is that on some symbols I get great pattern recognition and some I don't. And like spiders, so there's all the stuff there. Now, if you are a Thinkorswim user, yeah, and Daniel, I don't know what that is. I'm actually going up to Chicago next week to talk with them, and so I was going to ask them. I don't know if it's something that I'm doing wrong or what. I know for them it's it's newer, so there's some things there that may kind of stand out. The other thing that TOS has, if you're not familiar with it, is that there is a scanner using what's called profit charts. Okay, and under charts, there's, if you see like right here, with charts, you're going to have regular charts and profit charts. So if you click on profit charts, then that will bring up this, and you can actually set up, they actually have a patterns that you can actually find, okay? And then what I do is when this comes up, and I can take a screenshot of this, and we'll go over this too, is that you can filter results, you can check which patterns that you like. I don't check all of them, I just kind of look for, falling wedges, head and shoulders, the strength and everything like that. And you can actually put in your own watch lists if you want and add different filters. So I say average volume is at least 750,000 shares, and I hit OK. And then all the symbols in this search come up here. So I can just say, all right, I'm going to, bring this up and say, wow, okay, there's a wedge. So the nice thing is that there are ways to, within Thinkorswim, and then of course with FinViz, there are nice tools at your disposal to take advantage of this and to find stuff. Okay? All right. So, and just to know that that's there, and this is stuff too that you can get. I mean, there's free information on how to set this stuff up on the Thinkorswim website. I think TradeStation has one too. I know they have an auto trend lines and stuff like that too. But that information's all out there, and so I don't want to spend a ton of time on that. But we can certainly get links and things like that too. Okay? So we'll come back to that. Let's dive in now. And so there's the auto draws. So again, the one drawback I've just seen with that is for some reason, at least on my charts, some symbols it does draw all the lines and some it doesn't, and honestly just don't know why. But again, it's a new feature for them. And yeah, out of curiosity, let's see. Let's do daily. All right, so VMware. So here's all the stuff on VMware. Let's put in GoPro. There's kind of stuff on GoPro and things like that too. But the key is going to be just being able to recognize this stuff on your own too. But it's just kind of pointing out that there are some tools out there that can help you. Apparently, there's no pattern for straight down. Okay, so and then they're on slide 26, and you've got that. I'll actually add real quick to a screenshot. I see a couple of people asking about that profit charts, so I'll put that screenshot here as well. So on profit charts, you're just going to go to patterns, and then you'll just run. It'll run a scan. Okay, perfect. Okay, yeah, Don. The rest of the charts with the black, the charts with the blacks should have a lot better contrast. Okay, okay. So those scanners are really good tools, but the real thing I want you guys to understand, and I find this is really what helps, is that you want to be able to recognize these patterns on your own. Okay, it doesn't mean that you have to spend hours and hours looking through charts. What I want you to do is that if you happen to be looking at a chart, be able to recognize any patterns that are taking shape. Okay, so that's a big difference. Okay, there's a big difference between hunting for patterns, because you don't need to, because these scanners will do it for you, versus if you happen to be trading, Netflix or something like that, recognizing the patterns that are taking shape on it. If you're looking at a daily chart or a 30-minute chart or a weekly chart, just kind of see with the current price action, is there one of these patterns setting up that you can take advantage of? Oh, TOS, a couple people, some people that don't know it, TOS is Thinkorswim. Yeah, no worries. Okay, so knowing how these patterns work also means recognizing how and why they're getting painted on a chart. And what's nice is when you start to recognize that, when you start to see, here's price action and it's coming down, and you can see it come up and fail and come down, and you start to recognize, like, oh, it's forming a wedge. Okay, so you just got, we just got to be patient and let this play out. And you start seeing that, and it just becomes a lot easier. So chart patterns are a powerful and consistent source of trade setups, and they form an important base in every successful trader's plan. So first, we got to ask ourselves, why are these important to know? Okay, and the main reason is that the stock market, like history, repeats itself over and over again. And a chart pattern is essentially a map of human emotions: fear, greed, worry, joy. It maps them all. They're all painted on your screen. Okay. If you think about, have you been in a trade? And turn on this AC here real quick. Have you been in a trade before and you get so frustrated with it and you capitulate, right? You get out and you're the low tick of the move. Well, that's the market, and that's forming a pattern that's readable and understandable and provides a clue as to what's going to happen next. So it is really literally a journey of kind of the collective trading emotions out there. And what happens is you start to understand this stuff, you start learning that, because nothing moves straight up or straight down, right? Even a nice uptrend can look like this and really fake a lot of people out. But as you're looking at patterns that form within this, you're looking for clues that you're going to see either a continuation of this uptrend, right? Or is this trend about to end and start moving lower? Okay, kind of like Tesla's been doing. And that's really a big part of it too, is that patterns will kind of give you that information. And that's a good question, Tony, is that if everyone sees the same pattern, should you do the opposite of what the patterns say? Now, we're going to talk more about that and what to look for. But one of the things I've found with Wall Street is that if everybody expects it to happen, it ain't going to happen. How many times on CNBC have we heard about the Santa Claus rally, as if it is a given? And I mean, at least at this point, Santa Claus has not come to town over the last week. And so it's interesting like that. The more that you hear something as a given, or the more obvious something seems, just remember that it's going to be obvious to everyone else too. So chart patterns give you a heads up if the trend is likely to continue or if a reversal is potentially about to happen. Chart patterns also clue you in where we are in the fear-greed cycle of human emotions, and it's fear and greed that moves prices. These chart patterns don't form all the time, but when they do, they are powerful. So the frustration that comes with chart patterns comes with the realization that it is not an exact science, okay? And in fact, it's often viewed as more of an art form than a science, because not every pattern is perfect. So if you have if in your mind a head and shoulders looks like that, head and shoulders top looks like that, and then that's the subsequent breakdown, well, and then you kind of run across one that looks kind of like this, it's like, that's probably not one, but it is. They're the same thing. And it's just important to understand that it's it's not so much the exact, like, okay, it has to look exactly like this. It's just that this represents a group of emotions, and this represents the same group of emotions, just at an angle, okay? And so that's really what you're capturing there, and it's essentially, capturing the struggles and the trials and tribulations that everybody in that trade is going through, and the net of that struggle is that there's a high probability that this thing is about to break down, which is represented by a head and shoulders top. So the good news is that once the basics of charting are understood, the quality of chart patterns can be significantly enhanced and understood by looking at volume and key indicators. It's also important to understand that a chart pattern is simply a more complex version of trend lines and support and resistance. And a pattern is, in effect, a specific combination of support and resistance levels and trend lines designed to give traders a clean understanding of what process is currently happening. And that tends to lead to a specific result. So the key with this, and again, we saw that Edwards and McGee book, 782 pages of patterns, okay? So the key is not to get overwhelmed. I mean, you can see, like right now, I'm on slide 34. And if we were going to go through, 782 slides today, that would be brutal. So the key is not to get overwhelmed. You don't need to know them all. Just focus on the most powerful patterns. And of course, understand how to use them. And really the most powerful patterns, the easy ones are triangles and wedges, and then from there it's head and shoulders. Okay, and we're going to look at a couple of other ones as well, but these are the must-knows. Okay, if you're going to do any type of pattern recognition and different things like that and start including that, you've got to know these. Okay, they're basic, yet the more you understand how they work and you can combine them with some specific indicators, the more powerful they will be, okay? So a lot of times you'll hear pennant, okay? Pennants are similar. There's going to be kind of, different renditions and things like that too. But they're not as powerful as what these are. What time frame? Okay, let me look at it. We're near the end of this section, so let me make sure just questions and things like that are answered. Algos don't have emotion. Are retail traders moving the markets that much? Need to know how to recognize who we're trading against. Tim, well, remember, algos are also trading against each other. So whether it's human beings making the trade or algos are they're fighting each other to make money, which is actually great. So, and that's going to end up forming similar patterns because, if the algos that are losing money that day are going to be selling, the algos that are making money that day are going to be buying, just like if it was a retail crowd. It just creates a lot more volume and a lot more precision. Do you use shorter time frame patterns to predict longer time frame patterns, like hourly to predict weekly, daily, et cetera, et cetera? Dwayne, you can. I see what you're getting at there and just kind of looking at it as a heads up. I generally, when we go and we'll look at some current market activity, I do like to look at 3 different time frames and kind of see how they are. But in general, you can think of the time frames as independent. I mean, an hourly chart is not going to impact a weekly chart. What time frame do the market makers focus on? So market makers are generally shorter term traders. Do you look at candle patterns? I do look at a couple basic candlestick patterns more for confirmation. Double and triple tops and bottoms. So Tony, those are good. To me, those are some of the more, those are the fairly obvious ones too, and we'll take a look at those as well. And let's see. Yeah, bull and bear flags, those are like pennants. Zeke is having mic issues. Good luck, Zeke. And okay, great. All right, so I think we are set. All right, so let's do this. Wow, time flies when you're having fun. So we've been going for almost an hour. Before we dive in, let's use this opportunity to take a short break. And let me get this going here. We'll kind of get into the fun stuff now. So let's take a short break. Start back at 2:10 p.m. Central, and we'll get the clock here. All right, guys, quick break, grab some coffee, run to the restroom, hug your kids, and we'll be back in 15 minutes. Okay. All right, so we're back, and now we're going to dive in. All right, so we're going to start off with triangles. Triangles are nice because they're super easy to spot. And, of course, it's important to realize what a triangle is, if you haven't thought about it this way, is the convergence of a downward. It's a convergence of a downtrend and an uptrend. Okay, one of those is going to work. It's going to form a triangle. Now, these triangles, they can be symmetrical, descending, or ascending. Now, I've found that triangles are essentially one of the simpler and more powerful patterns that are out there. You just want to be able to recognize, when they're forming. So what's a symmetrical triangle? Essentially, a symmetrical triangle is one of those patterns that can go either way. And what they'll tell you in most of the charting books is that you wait and see which way it breaks. And once it does, then you get on board. Okay? I actually disagree with that. I'm always a big fan of trying to look at something and see like which way is it likely to go and start nibbling on a position, and then if it breaks out, adding to it, right? So one of the things I found is that this pattern, because it's neutral, it can be very, very powerful when combined. It's neutral in and of itself. It can be very, very powerful when combined with other indicators, okay? So here's Jazz on a 195-minute chart. All right, now here's two symmetrical triangles. So here's one here, okay, and here's one here. Now in both of these, you can see that there is a squeeze developing here at the end. In both of these, momentum in the squeeze, and this one was clearly headed up. I mean, that was heading up here, right, even when it was pulling down. And then you get the squeeze, and then we're off and running. That's a great, nice kind of a pattern there when you have something like that. And then this other one, you kind of had a similar thing where you got the reversal of momentum, right? And then by the time the squeeze actually fired, we're off and running. So this combination, this in and of itself is great. And you can see here 1, 2, 3, 4, 5, 6. We got 6 bars. Once you get 6 bars, I mean, at that point, it's typically not going to fail. Okay. Here we got 1, 2, 3, 4, 5, 6, and here, although it was kind of sloppy, it didn't fail and come all the way back down, and in fact, continue to go higher on the next squeeze. So Now, I can see here that a couple of people don't know what this is, and I will get to this, and I'll explain this in more detail, okay? Let me get through a few more slides first. But I do like, you know, so 195-minute chart, a lot of times people ask, what's that? Well, the cash session, and of course this really just applies to cash sessions, i.e. stocks, you know, futures, and of course trade 24 hours. But the cash session, at least central, is 8:30 to 9, or to 9, right? 8:30 to 3, so that's 6.5 hours. Well, if you're going to do hourly charts, you're going to have 6 one-hour charts and then one half-hour chart. I just like to have equilibrium, so 195-minute chart, that is 360 divided by, or 390 divided by 2. You know, like a 78-minute chart, that's 390 divided by 5. Et cetera, et cetera. So that's why I kind of use some of those odd ones. Of course, a 30-minute chart works. That's equally divisible into 390. So for these, I'm not necessarily scanning for them. Like I'll scan, and but it's more kind of looking at the pattern, looking at the squeezes, and then seeing if we're getting, you know, a wedge setting up, right? So the idea with this is that this can be a bullish or bearish strategy, okay? And I'm going to get to the filter here in a second. For stock traders, the typical scenario and what they tell you, you know, in the rule books, quote unquote, is you wait for a break one way or the other, you know, or if there's a squeeze developing, and watch the momentum on the squeeze, and then you can buy the breakout or sell the breakdown or wait for a retest of the level after it breaks. The problem is that if you are one to wait for a retest, the best ones never retest. When it breaks, it breaks. It goes. So as an options trader, this is actually one of those times when it's a great time to buy a straddle or a strangle while the triangle is forming if you're unsure as to which way it's going to go, okay? However, that being said, one thing I want to show you here is a tool. Is this tool here that gives you a great heads up as to which way this is going to go. Okay, so in terms of tools, there's two I like to watch. One is volume with just, and all this is just a 50-period moving average of volume. But the second one is accumulation distribution. Okay, and if accumulation is increasing while a pattern is forming, there is a very high probability of it breaking to the upside. Okay, and vice versa. So what you can see here is that while this pattern is forming, okay, you can see that distribution is increasing. And I mean, almost any time you see that happening, whether or not there's a squeeze, is going to break to the upside. It's showing you that stock is being purchased. Okay? Yeah, and another one I like, which we'll look at in a little bit as well, is on balance volume, if you're familiar with that. And it actually works well with squeezes too. And so do any of you use this? This is just something I've only really used it just in addition to with patterns, but it's been super powerful that way. So we'll review this. So if on the break of a pattern, so we'll talk about this indicator here real quick. First, let's talk about volume. So if on the break of a pattern, volume goes above its 50-period average volume, then the pattern has a high probability of success. Okay. If the break happens on low volume, it is just a probe and will most likely fail quickly. From a trading perspective, I like to get in early and then watch. If the breakout happens on low volume, then I can just take a small profit and move on. So if we come back here and we look at Jazz, we can look at it and say, okay, you know, boy, I like this. I can see that accumulation distribution is heading higher while this is forming. That's positive. I'm going to start nibbling on this. Okay, it breaks out. What's volume doing? Is it above its average? Yes. Okay, that's great. And typically on something like this, you're going to see continuation. Here we are again. Wow, man, this is super bullish here. I mean, this thing is, even when this is going down, you can see that it's like this trend just continues to rocket out. And when it finally does break, I'm checking volume, okay? And you don't really need it the whole time. You just, that breakout needs to have some pretty decent volume to get that move going, okay? That's telling you that there's some actual, action in there. So, okay, so what about accumulation distribution? So here on TradeStation, this is what it's called. It's already on the platform. It's called Accum Dist by PR. I mean, that's just the name of it. It's kind of a shortened version of what it is. On Thinkorswim, it's accumulation distribution by PR, and it's short for price. So these are available on TradeStation and TOS. They're already on the platform, and this indicator measures accumulation and distribution, and this particular one does not include volume in the calculation, and that's on purpose. Accumulation occurs when the close of the current bar is greater than the close of the previous bar, and then vice versa. So what I'm looking for is I'm looking for advanced confirmation, okay, or like we saw in Jazz, or an obvious divergence where price is going higher yet this indicator is going lower, or vice versa. Okay, and we'll look at some more examples of this. And if you're not familiar with what a divergence is, this is what it looks like, okay? And this is just where you have, prices going higher, but whatever oscillator thing you're using is making lower highs. That's a divergence, okay? And the same thing is like here, you get a lower low, but you get a higher low here. That's also a divergence. So you're just kind of looking where, is the indicator confirming price or is it diverging from price? Okay? So now we're going to come back to USO, which we looked at in the first hour, right? And here's that head and shoulders pattern. So if you look at this right here, okay, this is a key pattern. Here we make a lower low forming the right shoulder of the pattern. If we come down to accumulation distribution, you can see that it actually makes a lower low, okay? That is a huge, huge, huge red flag. Even though momentum here on the squeeze is coming higher, there's no one buying this, okay? If people were really buying this, if the algos weren't trying to fake people out, then this would be noticeably higher here, okay? And that's just a little key concept to look at when you see something like that, just to be careful. Now, here's a similar pattern. This is on GMCR, and you can see when you got to the right shoulder, I mean, this thing's cruising. That's accumulation. Okay, so it's a small detail, but it's showing you within the context of that pattern, is this stock being accumulated or is it not being accumulated? Okay, that's a huge deal, because what will happen is, especially like algorithms, they can actually sit there and take short positions but make it look like the stock is going higher, meaning that they're managing that process. It's kind of like, okay, yeah, we're just going to, let's short. Okay, let's drive it back up again. Let's suck people in and then short some more. All right, let's drive it back up again and suck people in and short some more. Well, if they're doing that, this is the kind of stuff that can catch it, because all in all, what's happening is, and the rallies are kind of false, because the rallies are happening in the absence of, there's just no selling, so it's able to actually pop pretty, it's actually able to pop higher, and this is what measures it, okay? So, all right, so let me come back here. I'm just going to review this again real quick right here. So accumulation occurs when the close of the current bar is greater than the close of the previous. Okay, that's the short version. It's a little bit more complicated formula than that, but it's a simple way for this to track accumulation and distribution like that. Okay, so that's kind of a new tool in our toolbox. We're going to continue to add a couple more, but don't want to kind of overwhelm it right from the get-go. Oh, nice, Rick. Yeah, no, I like those too. And there are indicators like that that are similar. It's funny, there's somebody shooting a gun outside my window. That's awesome. Only in Texas, yeah. I'm looking at my window to see if I can see it. It's actually a loud gun. I mean, I've got a crossbow in here, and it's got a 180-pound drawstring on it, so it can actually shoot like 100 yards, but in case I have to defend myself. Hopefully, if I don't see like a laser dot on me, I think I'll be okay. Okay, so that's the first one. So what we're trying to do here is we're trying to understand some basic yet powerful patterns, but start piecing together how we're going to know when these things are going to take off or they're going to fizzle. Okay, so the first one was a symmetrical triangle, which means it could go either way, but now we've got a couple of tools that give us an edge as to which way this is going to go. Okay, the next thing is an ascending triangle, and this is one of my favorite patterns. Either ascending or descending, but ascending triangles, essentially it's super bullish, and what you're looking for is, a lot of times somebody asked earlier, like, what about double tops and things like that? Okay, and that's almost a double top right there. It's like you come up and, double tops and triple tops and things like that aren't that exciting to me unless they're within the context of a triangle like this. So what's going to happen is, on something like this, you are going to have a series of kind of topping points, yet notice that the lows continue to be higher lows. That's great kind of accumulation, building up energy for an explosion higher. Okay, when I'm doing my end of day trades, this is the pattern I'm looking for combined with a squeeze. Those are the ones that tend to work the best. If I find something with a squeeze and it doesn't have this pattern, it's not as high of a probability situation. All right, so now let's come back and look at an example of this with these new tools in our toolbox. So here's Tesla, daily chart, very nice triangle, ascending triangle here that's setting up. We come down here, we say like, wow, accumulation distribution. Even when this thing is trading sideways, okay, there's still accumulation. It makes it blindingly obvious. I don't know about you guys. To me, that's just kind of like, wow, this thing is continuing to be accumulated. We can see now that there's a squeeze, and of course, you get nice volume on the breakout. And on something like this, you're typically going to get a good move. It's essentially, everybody's always worried about, oh, I wonder if this is the fake out. If you see something like this, you generally is not going to be a fake out. It's going to be the real deal. And the problem with, the common knowledge is, oh, be patient and buy the pullback, is that these moves, the real ones, don't pull back. Okay, they go. And what you're looking for here, and like what you don't want to see, so what you don't want to see is like right here, and you can just kind of see is like, okay, yeah, within the context of this, it's flat, but we're still going up, right? What you don't want to see, a divergence would be something like this, where it's like, wow, price here is going higher, yet you can see that it's being distributed, right? That's what you're looking for. You don't have to look at it for a second to say, yes, that's still going higher, right? You'll see some examples where money is like flowing out of a potentially bullish position. Okay. Yeah, no, and David, when you combine this with the squeeze, you know what? I'm seeing enough questions too about what is the squeeze. So let me take let's take a quick thing here, and I'm going to add a few slides in on what is the squeeze. And I know a lot of you know what the squeeze is, so I'm only going to take like 6 minutes. But if you're, brand new and you just don't know what the squeeze is, it's going to be like, okay, John, I have no idea what you're talking about, which can be, not that fun. So let me grab this real quick. And okay, there we go. So I'm just going to grab a few slides here. Yeah, there's another gunshot. I don't know if you guys can hear that or not. So yeah, that 6 bar thing is yeah. These are again simple things that just make this so much easier. And okay, there it is. Can you guys hear that? I mean, someone's like going to town on a rifle out there. Okay, so let me do this real quick. Quick review on the squeeze. Before we go any further, let's make sure we are all on the same page with the squeeze. Okay. So what is a squeeze? Again, this will be real quick because I know a lot of you already know what this is. So what we're looking for is on a chart, we're putting 2 basic indicators on here. Okay, we're looking at Bollinger Bands, which they're at their normal setting, which is 20 and 2.0. That's the default setting. This measures standard deviation. Okay, and then the Keltner channels, also at their normal setting, which is 20 and 1.5. That's typically the default setting, and that measures average true range. Okay, so what we're looking for, and what the Bollinger Bands here in blue do, is that when price expands and gets more volatile, the Bollinger Bands expand. Okay, but then when price quiets down, the Bollinger Bands contract. So what happens is that when price contracts, then the mathematical calculation for the standard deviation, which is based on volatility, shrinks. And what we're looking for moments in time is that when the standard deviation, as represented by the Bollinger Bands, contracts to the point where it's trading inside of the average true range. Okay? And even if you don't understand all this, if the blue lines go inside of the red lines, you know, that's what a squeeze is. And literally, a market can't stay in this state for very long because it's compressing so much energy that it literally has to release that energy. Okay? This was what trade that, gosh, in 2010 that I did, one of my favorite trades where we had rack space, and here the Bollinger Bands are in red. And you can see they're sitting here trading inside the Keltner channels, and this is when everybody was super bearish on the stock. Oh my God, it's going to die? Blah 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 blah. And I'm looking at this going like, well, I mean, we're definitely going to, you know, we're going to go one way or another here. It's definitely going to release some energy, but which way is it going to release that energy? Okay, well, the next piece of that puzzle, just add the 12-period momentum. And if during that moment in time when the Bollinger Bands are inside of the Keltner channels, you look down and momentum's ascending, then guess what? When that goes, it's going to break to the upside, okay? And vice versa. So it's a pretty simple yet very powerful setup. If we look at rack space here on the weekly chart, you know, you can see that this is happening, and while this is happening, momentum is trending higher, okay? Now, this momentum's a little jagged, and you can actually just put this on your chart like that. It's completely fine. So we just went through and just kind of smoothed it out a little bit. So now here's that same first chart. When you see the red dot here, what that red dot is telling you is that that's the moment in time when the Bollinger Bands are inside of the Keltner channel, okay? If momentum is above 0, that's represented by this histogram, and you can see that it's above 0. Just notice that it's just been smoothed out so it's not so jagged, okay? So, and that's all. So that's, you know, again, it's very simple yet very powerful. And here's that rack space example. And again, daily chart, weekly chart, doesn't matter. So here's where the Bollinger Bands are inside the Keltner channel. It's like, wow, that's super easy to see right there. There's all the red dots, okay? And then momentum's going higher. You can see it here. And then once you see that first green dot after the red dots, that's the signal that the Bollinger Bands have popped back outside of the Keltner channels, and that energy is now being released, okay? And you can see here that essentially that energy is being released right up until you see 2 momentum bars in a row that are, if you get 2 bars in a row that are losing momentum, then it's done. Now here, you can see that, so this is essentially the signal here where the stock goes from $18 to like $35 or $34 very quickly. Now from there, it still keeps going higher, which can happen, but essentially the signal's done, okay? So at that point, the signal's done, and that's just what we're looking for. So how this works is it's in three phases. One is the red dot phase. Now, it doesn't matter if it has 1 dot or 20 dots. The problem with 1 dot, it just means that sometimes those are hard to spot. If it's got like 20 dots, it's something that you can develop, right? So that's the first phase. Generally, I like to try to find a reason to get in during those phases, and that's using those additional indicators. 2, that's the moment in time when this is actually a valid signal. In this case, it's a confirmed buy. This is typically when it really starts taking off. And then 3, at that moment in time, the trade is over, okay? Now, when the trade is over, typically at that point, you can like focus more on selling premium and things like that, but that's the life cycle of the squeeze. And then once that's over, this is essentially, no squeeze until the next one forms, okay? So that's what it is, and if you see that on my charts, that's what it is. Yeah, I agree, Raymond. Okay, so ascending triangles, all right? This is a bullish strategy. So we're looking for breakouts, but we're also looking to see if it's going to fail, right? Are we being suckered into this trade? So what we want to see here is, the question is, and again, the standard operating procedure is, well, buy the breakout or wait for the breakout to happen, then bid for the pullback. I personally am not a fan of this. Bidding for the pullback, guess what? The strong trades don't pull back, and if you are filled, and it's filled within a couple of bars, you may have just violated that 6-bar rule. It's like if it comes down and fails, within that time. So I like to get into the trade, okay, and this is part of the money management strategy. Here's the thing. I like to find excuses to get into the trade early, okay, and if it pops out like on low volume, then it's like, what's going on here, and just bail on it. But if it pops out on high volume, then I can then say, okay, and then if we get that 6 bars going, then this is something I can plan on staying in for a longer time, okay? So I do prefer sneaking in if possible, especially if there's a squeeze and the accumulation distribution is screaming confirmation before the move even happens, all right? And something like this, option traders can sell put credit spreads below the triangle or buy in-the-money calls, or of course do a call debit spread while the triangle is forming, or wait for the break and apply the strategies on a pullback to the breaking point. So I include that in there because that's, textbook. I don't recommend that. Why is 6 bars the magic number? It's just it's one of those things like over time, that's just what's been seen is that if it can make it, it's kind of like, New York. If you can make it there, you can make it anywhere. Same thing with the stock. If it can make it 6 bars, that's something that it's got its mojo and it's going to go. And we'll look at some more examples of that. Okay, so descending triangle. A descending triangle is bearish and is formed by a flat trend line, okay, and a declining trend line. So obviously the same thing as what we were talking about, just in reverse. You can see a kind of a, double bottoms, triple bottoms, quadruple bottoms being formed, yet anytime it tries to rally, it's making a series of lower highs, okay? That's super bearish, but it's also very, very good at trying to suck people in. Typically when this goes, it gets destroyed, all right? So this is a very bearish strategy. Same thing, conventional wisdom is you can sell the breakdown or wait for the breakdown to happen and then short a rally back to the breakdown point. Again, the problem is that the best trades don't give you that chance. Don't come back. And that's just something to keep in mind. So again, I like to kind of sneak in utilizing these tools, okay, and get positioned. Now, option traders, you can sell call credit spreads above the triangle or buy in the money puts while it's forming or wait for the break. Now, what's interesting here too is let's bring up Netflix. So if you looked at Netflix, and this is one that we sold call credit spreads on, but you can see the pattern that it's forming, right? So when we sold this, so, bam, bam, and when we sold these when we sold on Thursday, it had done a little bit of a rally and then it kind of petered out. And guess what? It was forming this with a squeeze. So, I'm looking for Netflix to keep going. But in the meantime, I'm going to sell some call credit spreads up here. So the 340, 345, all right? And you can drill down and, look at a 5-minute chart too. But, it's the same pattern and just applying it in a different way. If we look at Priceline, okay, this is another one we sold call credit spreads on. And what do we got going here? Well, here we are, and here we are. And as we're watching this unfold, it's kind of like, well, the chances of this going higher are very, very, very low. And we sold the 1130, like 1135 call spread way up here. And you can see that ultimately it just rolled over and failed. So even though, it's kind of bringing some of the stuff together, and if you look at the accumulation distribution line, while this is setting up and while this is kind of trying to rally here, this thing is just continuing to go lower, okay? So we'll spend some more time on this. And again, you don't want to look at it for more than a second. It's like, hey, okay, we've got this setting up. This is going lower. Cool. It's confirming. When it makes lower lows here, it's making lower lows here, okay? It's confirming the move, and that's what you want to see. Now, if we look here at Tesla, and we'll kind of look at this more, but if you look at this, there's a couple of different patterns going on here in Tesla. So you've got, on the one hand, it's like, okay, we got this big channel, okay, so we got this big channel trade, but within this, we have, a little bit of a, kind of like, wow, this thing kind of broke out here, and and it popped up and failed, right? Well, this is also a very powerful pattern, like an ascending wedge. So what you'll want to do as we're looking at this is that when we go through and we look at this stuff, we're going to look at all these patterns and just kind of combine them. But you can see too, just within the context of accumulation and distribution and things like that too. All right, let's come back over here. Yeah, and Gus, those Priceline and Netflix ones, that can be very powerful intraday like that, especially selling shorter term options like that. So remember, the nice thing about these patterns is that the patterns are time frame independent. If you want to swing trade, then you're going to be looking at daily and weekly charts, right? If you're day trading, then you can look at 30-minute charts. The pattern's a pattern. Okay, so a recent one on this too was VMware. So here, right here, okay, it's like, wow, it's rallying, everything looks good, this was a good looking squeeze there. But the next time that this came up for me as a pattern, you can see there was a very clear descending triangle forming, right? It's like, wow, that's, and sometimes, you'll look at stuff and it may not stand out because it's like, if you're so focused on this move, it's like, oh, okay, wow, look at that's super powerful and yada, yada, yada. But that's a very bearish thing, and it didn't really come into context until this high was made and we had a couple bars closing. And then you look down and you have a squeeze, and then you see that accumulation distribution is just kind of falling off a cliff, right? That's a super powerful pattern. And if it's on a weekly chart, you can actually, one of the few times that I like to buy, like say Delta 20 options that are further out, I've talked about weekly squeezes before, but if you get a weekly squeeze combined with a, in this case, a descending triangle pattern for a downside move, it's super powerful. And those are typically going to be your bigger moves. And on something like this, now this was one that we triggered in with that SMI sell to kind of get into that trade, but typically on something like this, when the stock was at, gosh, I think 88 or so. These $80 puts, now they're up 4 times. The in-the-money puts, those are approaching, that's up a little over 1.5 times. I mean, those are always going to have a smaller percentage move. But that's the kind of stuff, when you wait for the pattern and you wait for, that symbol to set up, you can actually get some powerful moves. Oh, Nick. So Nick's just asking the question: what's the best? Like, how far back do you go? He's saying that, hey, I go back 6 months. Is that enough on a daily chart? I like to go back more. So on a daily chart, I'd go back at least 2 years, if not more. It's not going to make a huge impact, but I like to be able to go back and just kind of look for. I'm a very visual person, and when I see like a pattern setting up, I like to go back and see how it played last time in the stock. Okay. Well, so the following wedge reversal kind of shifts gears a little bit. So let's spend a little bit of time here on these, and so let's go back here to a weekly chart and a daily chart. Now, have you guys found any of? So I'm gonna run a scan here on FinViz so we can find stuff. Have you found anything here that you like? Before, the one that came up was the ascending triangle, and we saw INSY. Okay, so let's look at INSY now with these few extra tools that we have. Now, based on what we've been talking about, is this something that we should be excited about over here on the daily chart? Yes or no? It's pretty obvious. So look what's going on here. So I'm looking at this going like, wow, I like the squeeze. I mean, this is a good pattern. And it's not quite this is more of a symmetrical triangle. But, and it may go higher, but this is not what I want to see. That's telling me that this stock's it's getting its distribution, and we'll look at more what this is too. Okay, so that's a symmetrical. Let's look for let's see, and that was strong. Let's look for wedge strong. Canadian Solar, CSIQ, let's take a look at that. Oh, it does not like that one. Let's see on TiVo. Oh, nice. My trade. Can you guys still hear me? My trade station has went down, which, they always like to do their server updates on the weekend. Oh, there we go. If not, we can do this on TOS too. So, yeah, I mean, you can see that we've definitely got a, kind of a descending triangle here, or a wedge here, right? And if we're looking at this, I mean, at this point, it's pretty much saying and confirming that this thing is going to keep going lower. Let's see if Tyco. Oh, yeah, let's look at Facebook. So what do you think on Facebook? We got a wedge. it's pretty obvious there on a weekly chart. Here it is on a daily chart. Is this something that we think is going to continue going higher, or is it going to peter out? Yeah, super bullish. I mean, look at this. So here, look at this. That's making new highs, okay? This is going higher even though it hasn't exceeded this price yet, okay? That is super bullish. And, the stock market cratered on Friday and, it's still managed to, eke out a gain there. And there's a weekly squeeze, okay? So I'm going to grab this as an example because I'm buying this on Monday. I mean, that's just awesome. Well, here, let's do, we'll get both of these together. And also notice, too, that I do like to look at, a couple of time frames here so we can kind of put it into context. It's like, wow, daily chart, weekly chart. I mean, it's rocking and rolling. And on this oscillator down here, it's also great, which we'll take a look at that, too. Looks great for more upward movement. We have super strong cum, dist, and a weekly squeeze all combined with a wedge. So that's super bullish. So does that make sense? Kind of put a few things together there? Oh, totally, yeah, I'll go through the oscillator too. All right, so let's bring this up. So what I want to do here is just like examples. So I'm going to rig up a couple more, and I want you to just use guys. Hey, use guys. I want you to, and then let's look here. So, and what you want is that, you want those immediate like, oh, dang, that looks really good, versus if you have to look at it for more than like 2 seconds, then it doesn't qualify, to be honest. This is, it's not rocket science. So let's come back here. And, okay, we got, and the nice thing here, by the way, is that you can just, if you hover over this, you can get a basic idea of what the pattern looks like before you bring it up. So, some of these that have already kind of taken off there. That one looks interesting. So, TiVo. I mean, does anybody have a TiVo except my mom? Okay, so if we look at this then, so what do you guys think? If you're looking at this now, here's, we got our wedge. We're looking for wedges, so we got a wedge. And, based on this, typically, we'd be looking for continuation to the downside, and is this telling us that the chances that this is going to go lower? Now, it's interesting here, and the answer is yes. I mean, because we're looking at this daily chart right now, and, you can see here that, wow, this thing is just, there is no buying here. I mean, it's definitely getting sold. You got some weird stuff on the weekly chart. I mean, the weekly chart, has kind of had this kind of a nice move here. But we're going to talk more about this in a second. And, of course, we got a sell signal here. So I like it. I mean, that looks good. Let's look at a couple cliffs. Oh, so let's do one more. I want to scan for one more pattern here. Descending triangle strong. Amazon. Let's look at Amazon. So the descending triangle makes sense. Still kind of forming. It looks like this could actually kind of take place here for a while. Yeah, I'd call this, it's moving with price, kind of neutral. That's a little bit of a sell here. So not bad. I mean, compare it though to like Facebook. Like, how obvious of a long is that? So when you recognize something, what I call, how obvious is that? It just pops out. Okay. All right. So we're going to be looking at more, but let's go through the rest of the patterns too. Okay, so well, remember, for the volume, we want to see the volume happen in the breakout. So during consolidation, you get low volume. What you want to see is when it breaks, that's when you get the high volume. Does that make sense? So it's okay. Low volume during consolidation is fine. Where you want to see, the break is you want to see the volume on the break. Okay, so we did the triangles. Triangles are, I mean, they're essentially my favorite pattern. They're very clean. They work really well with squeezes. Okay, and now we got a few tools in our toolbox that we can use to kind of weed them out. Okay, but the next one it's pretty powerful because and those are mostly mostly they're going to fall into the category of continuation. But I'm also fascinated in trying to kind of figure out those moments in time when something's like, okay, this thing is just about to reverse. Okay, and the best thing I found for that in terms of a pattern is called a falling wedge reversal. So this is for bullish reversals, and then of course we'll look at bearish reversals. So the falling wedge is a bullish pattern that begins wide at the top and contracts as price moves lower. Okay, so the top is wide, but then as it moves lower, it starts to contract. Okay, it just kind of gets narrower and narrower and narrower. And what you're looking for is that when it breaks out of this, it typically can go. I mean, it's typically the reversal. Okay, and if we look at let's come back over here. Oops. So, if we look at this on the dollar index, you had a couple of different things going on here, but you did have this kind of a, wide at the top kind of a pattern, narrow at the bottom. I mean, this is honestly, it's more of a kind of a symmetrical kind of a wedge. And we're going to study this one more in a little bit. But when you see something like this and you're looking for evidence that this is kind of getting bullish, we'll talk more about what this means. That's what you're looking at. And there was where's the spiders here? So if you look at in 2011, the stock market had a pretty steep sell-off. In this area here, and it's kind of the same thing where what you're looking for is, what you want to start thinking about is when you see it starting to fall, is you want to think about what this is going to look like in terms of what kind of pattern would reverse this, right? So here, when I see like, wow, here's this huge uptrend, right? Man, this thing is just cruising, it's going well. What kind of break is going to cause this to fall? Okay, and there's your wedge, which is the next one that we're going to find. And you can see here that this oscillator was screaming that this thing was done well before it happened, okay, which obviously we're going to talk about that. So the wedge, as I've just found, is that this is one of the best ones to understand in advance. Because typically you're not going to see it until after the fact, but if you understand how they form, just start keeping that in mind that you're looking for a potential reversal, okay? So the rising wedge reversal is, of course, the opposite. So this is a bearish pattern. It begins wide at the bottom and then narrows more at the top. Typically, once you break that, you're done, okay? Great way to catch a reversal on a rising stock or market. It's great when you get a squeeze, but one of the things I've noticed with this is that a lot of times there is no squeeze, okay? So with wedges, and triangles, whether it's symmetrical, ascending or descending, a lot of times that actually will combine with a squeeze, which is great. These typically don't, okay, but that doesn't mean that they're not powerful. Yeah, and when we dive into the live charts, we'll make sure you guys can see all that too. So for these wedge reversals, my main point here with the wedge reversals is I want you to be able to understand how they're formulated so you can keep an eye on them, okay? So this was, here was this is a picture of Apple, and I had this before pre-split. So this is before we did the 7-for-1 split. But when it made all-time highs here, you can see this classic wedge reversal pattern setting up, okay? And then when it finally reversed, same thing, kind of a classic wedge reversal. So my question to you is that on something like this, you're typically not going to get a squeeze. Okay, squeezes are more continuation patterns. They don't usually form on a reversal pattern. Okay, so you're not going to have the benefit of a squeeze, but you don't want to be caught off guard. It's never fun to buy a stock at 705 and then capitulate at 470. I mean, that just isn't fun. So what are the heads up here that you can look for? First of all, you kind of recognize like, okay, there's an ascending wedge pattern forming, so at some point this could fail. If we break that trend line, it's going to be nasty, but what other tools could you look at to give you that heads up? Okay? Okay, so this is where the other tools come into play. So this acceleration deceleration oscillator, okay, and this is again on TradeStation and Thinkorswim, and it should be on other platforms too. It's just those are the two that I use. So, I'm going to call it what it is. Let's call it impossible to pick a top, but there are a lot of clues when a run is about to end. So here Apple is making new all-time highs, okay, and what I'm looking at here at this moment in time is, wow, Apple's making new all-time highs, okay, right here, new all-time highs, and I come down here and I look at this acceleration, deceleration, it's like, what's going on here? I mean, we just made new highs, and, the next day this thing rolls over here, okay? Now I'm also looking at, we've got an ascending wedge in place. Okay, look, there's no squeeze to help us out here. So on something like this, then, and you can see that volume dries up. I mean, that's a key. I mean, you're breaking out here, and the volume just dries up. But now what we're looking at is this acceleration, deceleration oscillator turns red near the price highs, okay? Now, here's the thing. This is not a signal that's going to get me into a trade, okay? That's not like, oh, I got to short this because there's a red bar. But it damn sure is going to get me out of a trade. So if I'm an Apple going like, wow, this thing's going, I'm a little nervous about this trend line here, and, here we are, we're cruising up, and I see that this happens, you're going to go Amityville Horror and get out, okay? And it's one of the best exit signals I've found for failed patterns, okay? Does that make sense? This is kind of what will protect you from getting what I call algoed or hedge funded. And if we look at this, the acceleration deceleration indicator, okay, this is available on TradeStation and Thinkorswim. Again, those are the two platforms that I use. I also use is like Interactive Brokers, and this measures acceleration and deceleration of the current driving force. Okay, so what is the current driving force? Well, typically there is what's called order flow. You know, you call it current order flow, meaning like, wow, there's, you know, Fidelity wants to buy 10 million shares of Tesla. So, you know, no matter what's going on in Tesla, that company's buying the dip, and that's, you know, that's the current driving force of that price. Now, of course, that's combined. You know, it could be Fidelity is buying and somebody else is selling, but overall there's more order flow to the upside coming into that stock. So this indicator will change direction before any changes in that driving force, meaning it will change its direction before price. And what I found is it's the best early warning signal around that something fishy might be going on. So, and I'll show you where these are, but just so you know how they work. So the zero line is where the driving force is in balance. You know, essentially the amount of order flow to the upside is equal to the amount of order flow to the downside if it's neutral, okay? If it's higher than zero, all that means is that it's easier for acceleration of price to continue, okay, and vice versa. If it's lower than zero, then it's easier for deceleration or acceleration of price to the downside to continue. However, crossing above or below zero is not a signal, okay? This is not about if it's above zero or below zero. A change in color, whether above zero or below zero, is the early warning system. So don't buy when it's red, okay, and don't short when it's green if you're looking for an entry. More importantly, though, if you're in a trade long that is chopping higher, okay, and you're wondering if you're getting algoed, then look at this, and if it turns red, I would seriously just get out of the trade or at least tighten the stops dramatically, okay? You don't want to sit there going, gosh, what happened? If you're in a trade short that is chopping lower and this turns green, get out, okay, or seriously tighten stops. And what I'm talking about is in the context of what we've been talking about today with these price patterns and different things like that, okay? So now, if we come back here and we start looking at some of these things. So look at the spiders here when, you know, again, with reversals, there's typically not a squeeze going to help you out. But you can see that essentially it started losing its mojo here, okay? So it was kind of trading sideways here, but it had been decelerating, okay? And that's showing you that now there's pretty decent distribution going on. Again, it's tricky to see because you're not getting any volume spikes, you know, and there's no squeezes and things like that. But on the one hand, if I'm in a squeeze, okay, and it's like, all right, we're cruising along here, and it's like, ooh, I'm getting some red here. This will typically happen, you know, before any loss of momentum. Now, it doesn't mean it's like, okay, I got to exit this trade. It just means tighten up stops. I mean, you know, at this point, you don't want to risk it. But also keep in mind that if this thing breaks this trend line, you know, this thing is going to get crushed. And so that's kind of a nice kind of a heads up here. So right here, yeah, it's cruising along. This is your early warning. Okay, remember, this is a weekly chart, but this is same thing if it's a 30-minute chart or a daily chart or anything like that. Okay? Yep, so right here you can see, wow, you know, based on the closing price action, we're getting some action here. Early warning is saying that this accumulation will come to an end. Okay, and that's where that's just super powerful. So does that make sense? Again, what we're looking for here, in the context with which we're using this, is if we see a wedge setting up and we're getting nervous that this thing's about to fail, this is what's going to give us that early heads up. But it's also useful because now we can include this in on the charts that we're going to be looking at. So now let's bring this back here to daily, or weekly and daily. So now let's go back and look at Facebook. Does it still look good? Based on what we just learned about this oscillator, does Facebook still look good? Yes, absolutely. No, it's good. Yeah, the charts are clear and not overcrowded with data. Now, one thing I'll do in case, so it might help if, so you can see this better, is I'm just going to come in here and just make some of these lines a little thicker. Probably go one more on that. There, and that should help at least it stand out a little bit there. In fact, we can do this to the volume as well. That might be a little overkill. No, that actually looks good too. So let me do this over here as well. I'll take 2 shakes and a lamb's tail, whatever that means. Okay, so hopefully that's a little, and you can set this up obviously same way on Thinkorswim as well. Okay. So yeah, Facebook continues to look great. Let's look at, just out of curiosity, let's look at oil. I mean, obviously that's just a disaster on all fronts. And there's nothing here saying that this is going to lend up. It's confirming, right? Everything's being confirmed there. Let's look at Tesla. And we're going to look at, obviously, head and shoulders here next. So with Tesla, now where the weekly and daily help out here is that you can see on the weekly, it's decelerating, that's confirming. On the daily, it's kind of pausing here a little bit. So if you're in a shorter term trade, if you got in, this is kind of this is one of those breakdowns here, and if you got into this from a daily perspective and you got all this profit right here, and I see this happening, if I'm in a shorter term trade, I will start getting out of it, or at least, bringing this down. Does that make sense? Now, if I'm going to be in this longer, like I've got options that expire in 90 days, then, I can just kind of hang on here. But if I got options that expire in a week, get out, because this thing could just have a little bit of a snapback rally and destroy you. This is telling you that it may happen. Yeah, I love cup and handle patterns. We'll go through some of those too. Yeah, so these are all, so Scott, this is all stuff that's already in TradeStation. The squeeze, like the volume and this one, those are all in there already. The squeeze isn't, but you can go to their app store and try it. It's like a free trial to try it. Okay, let's look at a couple more here, and let me show you what this looks like on TOS, because it's on TOS as well. So I know I've got a lot of TOS users, and so same thing, you're going to have a harder time seeing that, but these are already on there too. So if we go over to studies here and edit study, you're going to see the, it's called acceleration, deceleration oscillator, and then accumulation distribution by PR. And they're already in there. Yeah, and so what we're going to do, guys, just so you know, is we're going to spend a little bit more time going over patterns, and then we are going to go through and kind of look at some of the major markets and things like that. Twitter, oh, somebody was throwing out a couple of symbols. All right, so what about LinkedIn here? LinkedIn, we got kind of a, interesting pattern. We're going to talk here about head and shoulders reversals. You got kind of an interesting pattern there. But this is pretty bullish. Now, if we look at Jazz, well, a lot of these stocks that I've liked got hit hard on Friday. Now with Jazz, it was kind of giving us that early warning signal. All right, here we kind of broke out. It's like, wow, this thing looks really good. And yet the next day, we kind of got that early warning. It's like, all's not well here. ILMN, same thing. So you got this almost the same pattern on that. Let's look at TLT. I mean, it doesn't get much more bullish than that. Now, the problem here, of course, is it's extended. So if you don't have it, it's a tough one to pick up. All right, let me see where'd my clock go. All right, yeah, we're getting close time to another break. Let's a few more things there. Okay, so any questions on that? Again, just kind of another tool. I mean, there's obviously always a lot of indicators. I mean, other things I like, on balance volume, money flow. Somebody had mentioned that, and those are great too. And if you use those, you can completely use that with this. Those are just kind of two simple tools I found that really make it clear if something is kind of confirmed or if it's like a red flag. For quick hit trades, can you do this on the 39 and 78 minute charts? Absolutely, Nick. Yeah, okay, so a lot of people were asking about on-balance volume, which I like. So that actually complements this very well. So if we come over here and let's look at on-balance volume. And you'll note that they complement each other very well. So, you can have both on there. You don't necessarily need to. So you'll see it's kind of a similar idea there. And then another one is, and so the thing that you want to do is, what I've found is that you want to get your chart clean. So here's money flow. Money flow is another good one. But I mean, what I would just say is that you can kind of, if I'm looking at on balance volume here, that's kind of telling me a similar story as to what this is. Not exact, but it's similar. And money flow is great. It's overbought, kind of oversold. But the main thing is, it's kind of like, can you don't want so many indicators on your chart that it kind of starts getting a little bit more, confusing. So I would just say that, if you've got indicators that you like, I mean, I like on balance volume and stuff like that too, but you just want to keep it pretty clean. So here, I'll come back here. And one thing that I've found too, and we'll go through later toward the end and kind of how I set up charts and stuff like that too. What I like to do is I like to set up specific charts for specific purposes. So the purpose of this chart is for patterns. So I don't have any moving averages or anything up here because I want to be able to see and spot patterns. And then my idea is that with patterns, I want to look at the squeeze, I want to look at volume, accumulation, distribution, or on balance volume is good too. And then this. So this is kind of my pattern chart. But then, I may have another one here where I'm looking at, the average true range. And so this will be my average true range chart. And so you can get like a daily chart and get like 3 or 4 of them, and it's nice as you go kind of a workflow and look at them all together like that. And we'll do that. We'll spend some time on that. All right, so let's all right, what time is it? 3:15. All right, do you guys want to break now or go for about another 10? Go to break now or go till 3:30 and then break? That's funny. Nobody wants a break. Okay. Cool. All right, let's keep going. That's good. That's a good sign. Okay, so now let's get head and shoulders going here. All right, so wedges and triangles. All right, now you're noticing too that I'm not necessarily going through and talking about pennants and different things like that, and it's not because they're not important. It's just that the patterns that I'm looking at, I find that they're the most important. But if you are looking at pennants, guess what? Use the same tools, okay? The same rules and the same ideas definitely still apply. I am, Debbie. Thank you for asking. Okay, so these are simple, powerful patterns. And again, the other thing too is if you've got 30 different patterns in your head, it can be difficult. My trade station keeps kind of whacking out on me, which is awesome. So those are the wedges and triangles. Those are simple, powerful patterns. And your main goal with this is to be able to identify them on the chart. And these are the ones that I think are most important to be able to identify by sight, because as you've seen, there are other websites that can scan for the more complicated patterns for you. But wedges and triangles, if you can identify them by sight, it'll help. And it's, they're simple. That's not too bad. If you are a swing and position trader, great. Focus on weekly and daily charts. If you're a day trader, focus on the 39 and 78 minute charts, or 30 and 60, or it's not a huge deal which ones. I don't recommend looking for patterns on charts that are smaller than 30 minutes. The main problem here is that it's not only too much noise, but you're going to be fighting with algos, okay? The algos own the 1 and the 2 and the 5 minute charts. So why would you ever want to trade against super fast computers? And I've talked to a couple people like that where they've looked and they're trading and they've done it for a year, and they're trading the 2 and 5 minute chart, and they're kind of sometimes it's good and sometimes it's not. It's they're down a little bit, but they've spent a lot of money on commissions, and that's why you don't want to try to outgun the algos. Get on 30 minutes and above, and then you're just in a more level playing field. Now, if you love 2 minute charts and you're making money that way, great. Don't change it, because everybody's a little different that way. But if you've been trading like 2 and 5 minute charts and it's like, this is frustrating and I'm super tired at the end of the day, great. Stop watching them and go 30 minutes and above. Okay, so that's not what I wanted to do. All right, head and shoulders. So the head and shoulders pattern is generally regarded as a reversal pattern, and it is most often seen in uptrends, okay? And it's also more reliable when it's found in an uptrend. A head and shoulders top during a downtrend is a little weird, but a head and shoulders top in an uptrend is actually pretty powerful. So eventually, after an uptrend, the market begins to slow down, and the forces of supply and demand are generally considered in balance. Sellers come in at the highs to take profits, i.e., this forms the left shoulder, and the downside is probed. That's the beginning of the neckline. Buyers soon return to the market and ultimately push through to new highs. This forms the head. However, the new highs are quickly turned back, and the downside is testing again. Okay, that's important. The new highs are quickly turned back. So this keeps the neckline going. Now, tentative buy-in reemerges and the market rallies once more, but it fails to take out the previous high. Okay, this last top is considered the right shoulder. Okay, so here we go. Wow, new highs, and we get a little bit of a pullback, and then bam! But this one fails. It fails actually pretty quick. And it's like, all right, the buy the dippers come back in, let's try it again, and then it fails, okay? And that's how that's the psychology of that, okay? And that's what's going on. And at some point, you're going to get capitulation, essentially. So buying dries up. And why does buying dry up? Because everybody who wants to be long is long, okay? So buying dries up. The market tested downside yet again. Your trend line for this pattern should be drawn from the beginning neckline to the continuing neckline. Okay, so what does that mean? It's like, you got this and da-da-da-da-da, and that's your neckline. That's the neckline is essentially all the support below that. And volume has a greater importance in the head and shoulders pattern in comparison to other patterns. Volume generally follows the price higher on the left shoulder. Okay, so typically over here, you're going to get higher volume. However, the head is formed on lower volume, and that's essentially kind of a key there. This first, bam, it's like, wow, a lot of volume here, and then it tries it again. It's like, not much interest. That's a huge red flag. So it just indicates, the buyers really aren't that aggressive. It's more people taking profits, people dumping their positions. And then here, you typically even have lighter volume, okay? So think of it as a head and shoulders top is forming, the volume is going down, okay? And that's a pretty textbook move, okay? Now, the pattern essentially is done when this neckline is taken out, and then when it does, that's when you should see volume increase again. So just think of volume decreasing steadily during this pattern, and then when it breaks, then you get the increased volume again, okay? So it's kind of a lot of moving parts there, but on the other hand, it's fairly simple. And we'll look at a couple of examples here. So just in terms of, this is kind of a classic definition of, you get the left shoulder, here's the head, and the right shoulder, okay, and there's the neckline. So that's like the clean, easy peasy one, right? If we're looking at a market, now you can see here that in the reality of it is that here's the left shoulder. It's not as clean as this, right? That's super clean, but that's great. Sometimes it's going to be a little sloppier and stuff like that too. There's the head, that's easy. Right shoulder, that's very typical what it looks like, and essentially the lows are support, and that's the neckline. Once you break that, typically you're going to go, okay? And if you know how this pattern is formed, you can play this. It's like, if you see that this makes a new high here and it fails fairly quickly, guess what? You can buy the next pullback because you know that most likely we're going to come up and do the right shoulder, right? But then you also know to bail and not hope for like a 1272 extension there because it's probably not going to happen, right? And then in terms of volume, you can see here's that shoulder there, here's the new highs, and here's this, and you can see that the volume here and here and here gets lower and lower and lower, and then when it breaks is when you explode. Okay, so slide 73 is kind of textbook examples of how head and shoulders tops look. And if we come back here and we look at Tesla, so you've got this pretty massive head and shoulders kind of top here on a weekly chart, right? There's the neckline, and we took it out. So here's this high here. There's the volume, new high, lower volume, and then you have this shoulder here. It was made, and there's a little bit of a volume spike there. And then when you break down, you kind of get higher volume. So the general idea here is while this is forming, you've got lower volume versus, look at this move here where you got a high and then a high and then a high, and the volume is just, tremendous. Okay, so again, once you see it, it's kind of like, okay, it's in the process of forming. I get that. So good question. So, John, head and shoulders usually fail about 50% of the time. So this is where we have the other tools, right, in our toolbox, because without this stuff, you can't really filter what's going on. And so what we'll do is we will look at a combination of times when this has failed, not failed and stuff like that too. In terms of the accumulation distribution, I mean, you can see it's just following price here. That's essentially kind of saying yes. Here, here's a low, and this was a lower low, and you can see that this is essentially making a lower low there, and that's like, wow, this is real selling. Kind of come back up here, and we roll back over. So, I mean, it's kind of, there's not any divergences. It's just kind of moving with. Over here on a weekly chart, obviously this is a little bit slower to move. I mean, you can see here that, you've got the sells going on there. It's coming down here a little bit, but, weekly charts move a lot slower. But you are getting, what we want to look for then is, what is a fake out going to look out? What is a fake out going to look like, right? And now we can kind of come back over. Let me, log in. TradeStation still being a little goofy over here. Let's see. Here, let me bring this up over here. All right, so, and we'll look at some examples, but I want to look at both a head and shoulders top and then, of course, a head and shoulders bottom. So I remember this one. I had actually looked at this for a class. So here's Tesla, and it was forming a head and shoulders top, and it was textbook, okay? So real-world example here. Volume high on this one. On the second one, not so high. Over here, not so high. And for all practical purposes, it looked like that this should go, right? Okay, but this ended up failing. So the question is, so my question to you guys is, what do you think we're going to look at to see if it's going to fail or not? Oh, good. You guys are getting, okay, so you guys are getting the same TradeStation stuff. Sometimes they do server updates on the weekend, which is always nice of them. Okay, so here we go. So here's Tesla. Head and shoulders top. Volume is textbook. Okay. This thing should go. Wait a minute. Accumulation distribution continues to go higher. What's up with that? So essentially, if a head and shoulders is going to work, then this is going to mimic the head and shoulders. If it's not going to work, okay, does that make sense? Here, let's bring, looks like TradeStation is back on. So if we look at Tesla here, I mean, you can kind of clearly see that here it's following the head and shoulders pattern, right? Cool. That makes it easy. That's legit. Versus this one, where instead of following it, I mean, it's kind of like it didn't even notice that there was a potential head and shoulders setting up. Okay, so does that make sense? It's just like a few things like that. Usually it's just kind of like, oh, got it. Okay, that makes total sense. Yep, okay, cool. Now remember too that this is the early warning sign. So if you're in a trade, this is an early warning. So you don't want to look at you don't want to look too much into this except as kind of early warning, right? So early warning is going to be here when it's like, wow, I think this thing's going to break down, all right? I think it's going to break down, and what do we see? It's like, oh, I guess we got green, mostly green here. I guess that's not going to break down. So that's what you're using that for. Okay? All right, cool. So head and shoulders bottom. The head and shoulders pattern can sometimes be inverted. The inverted head and shoulders is typically seen in downtrends. And what's noteworthy about the inverted head and shoulders is the volume aspect. Okay? The inverted left shoulder, so kind of the same thing here. So head and shoulders bottom is going to be like this, and there's the neckline. So over here, you're going to see volume on the head, lighter volume, okay? So on lighter volume, but then the rally from the head, however, should show greater volume than the rally on the left shoulder. Okay, so the volume pattern is different here, which is important to understand. So ultimately, the inverted right shoulder should register the lightest volume of all. When the market then rallies through the neckline, a big increase in volume should be seen. So if we look at this from so here's your left shoulder, your head, your right shoulder. Okay. And again, you're typically going to see volume here, light volume here. This one could be a little bit more. But the idea is that when it breaks, that's when you're going to see your biggest volume. And of course, this is just kind of a textbook example of what it looks like. So here is, yeah, I'll go back and get that one too. So, here's Apple, there's the neckline, et cetera, et cetera. So on stuff like that, then, what you're looking at is you're going through and you're looking at the volume aspects of that, okay? Okay, so let's do this. Now it is officially time for a break. And then we will come back and get into the home stretch here. All right, so let's take a short break, and we will start back at, this time we'll do 10 minutes. So 3:45 p.m. Central. Yeah, I'm going to go find that guy who's shooting guns nearby, so if I'm not back in 10 minutes, you'll know that that did not go well. All right, guys, 10-minute break. Let's remove this. And then I am going to get toss cruising here. And so in Thinkorswim, for those of you that use it, I'm going to go in here and just increase the visibility. And let's see, I think, did I get that one? Okay, so there's that one. So that should be a little bit easier to see. And then let's go in here. Looks a little easier there, and I think that'll be good. So then what you can do is just, of course, style, just save it with the indicators, and we're going to call this patterns. Actually, you know what? Hold on just a second. So what I'm going to do here is I'm going to turn this on too. So select patterns, these are all on there, that's great. And then we're going to save this. We're going to call it patterns. And we're going to include the patterns in study set, or that will be a bust. And then we can bring 3 charts here. And then I can just load the style, and if I remember what I called it, that's always a plus. And then let's go weekly, daily, and then we can do like 78-minute here. So what we want to do now is we can look. I'm just killing that trade station there. We can continue to look, and we want to kind of tie this in a little bit, where we are going to be, in terms of buying and selling decisions. So let's look at Facebook. I mean, that's one we've been looking at. And let's link these together. So red, red, and red. So for Facebook, and again, sometimes Thinkorswim will draw the patterns on there, and I don't know why it doesn't sometimes. That's one thing I just don't know. And I'll ask, like I said, it's a new feature for them. But this is generally how, if I'm looking at patterns and things like that, I want to look at a weekly chart, a daily chart, and then just some kind of intraday chart. So I'm looking at a 78-minute chart. It could be 60 minutes. It could be 30 minutes. It doesn't really matter. Just kind of gives you an idea, okay? And typically remember, of course, that the larger the time frame, the more powerful. There's always on a 78-minute chart, there's always going to be like a lot of noise and stuff like that. But, these little patterns that we've learned, they happen all the time. So here's that falling wedge on a 78-minute chart. Guess what? When it breaks that, it's ready to go. Okay, and so those are things like that that you can just kind of keep an eye on. But I spend most of my time looking at daily charts and above. Let's look at Tesla here. And you can see this is one that we've been, my main thing with Tesla here, and I saw a couple of people asking, and here's one of the things that you'll notice too. I mean, we're kind of extended. We're like 127 extension territory, and it's saying here like, boy, you know what? Starting to see a little bit of bidding come into play, and that's great. It's a good time to be out of this trade. This is not somewhere where I'd want to be adding to it right now, but if we can get kind of a kickback rally, like I don't want to Carolyn's resistance levels or anything like that, that would be perfect. Okay, so it's just kind of a little bit of tools to kind of help time that trade and everything like that. Yeah, Trevor, I'll totally do that. And just so you guys know, what you can do is, if I'm going to save grid, and where'd my little pop-up go? There it is. Patterns. And then what you can do here, if you guys didn't know this, then I'm just going to say share grid. And create this link, and we'll get you guys a copy of that link. And then you don't have to recreate it. It's just, you just open it, and there you go. So now what I want to do is let's kind of bring it back, and we're going to come back to FinViz here, okay? And let's look at some other patterns. So they've got other stuff here. Head and shoulders inverse, head and shoulders, multiple bottoms, multiple tops, channels up, descending triangles, and things like that too. What I want to look at initially here, since we just looked at head and shoulders, let's look at head and shoulders tops, sort by volume, and we can see, of course, Tesla had come up. Let's look at ITUB, don't know what that is. Foreign regional banks, that would make sense. So, if we look at this, we can see that it's like, all right, yeah, there's definitely a head and shoulders top here. Oh, you know what I don't have on this? Is volume, but I can get that on there. So you got a head and shoulders top. This is essentially confirming the move. There's not any divergences or anything like that. All right, and that's what you're looking for. It's like for that to kind of confirm what's happening. BBD, this is Banco Bradesco, and similar. It's a foreign bank, so you're getting kind of that similar stuff there. Let's see, accident and health insurance, UNM, head and shoulders top. Oh, there we go. We got the patterns on that finally. Again, I don't know why. Sometimes they come up and sometimes they don't. That's, again, I'm going to ask them. So I like this one because it's kind of on the verge of rolling over, okay, versus those other ones that were already kind of tanking. So if we look at this, you can see we're kind of on the verge of rolling over here. We do have a squeeze. This one's kind of lost acceleration. So this is confirmed. On a daily chart, same thing. It's kind of just moving along. There's no divergences here. It's confirming kind of what's happening, right? And then, of course, you got this annihilation here. So, something like that, it's like, we just looked at FinViz and said, okay, cool, there's a Head and Shoulders top. Everything's fine here. It hasn't broken the neckline yet, so this is just kind of saying that the chances are pretty high that it will. And then in a perfect world, if we get a little bit of a rally, that would be fantastic. And I could, sell a call credit spread. I could buy puts, and of course buy a put debit spread. So essentially, any option strategies that we've talked about in something like this would make sense. So like, okay, great, I'm going to buy a debit spread here. I'm going to sell call credit spread, right? Yeah, and then the next thing to look at too is what about some of the stuff that's just been imploding? So if we look at crude oil, i.e. USO, I mean, is there anything to do here? And there's not. And it's one of those things like, if you're flat, you're kind of just watching. I mean, we can see that this weekly squeeze in oil has continued to push lower, right? We've had a couple of, tried reversals here that just aren't, it's just really a pause. But boy, this thing is just getting dumped, right? And so there's not much we can do there. And I think trying to play the bounce on something that's in a free fall is kind of a dangerous game. But, we can look at things like the dollar index and see if this thing is ready for a pause. I mean, it's been kind of cruising higher here. And, what's one of the patterns that we were talking about? I mean, I'm very bullish on the dollar, but that doesn't mean it's going to go straight up forever. And if we look at this, I mean, one of the patterns that's setting up here is an ascending wedge. So, like right in there. And I mean, if we break below this, we'll actually sell off pretty good. Now, that doesn't mean that the dollar can't keep going higher. It just means that it's a pause. And you can see, like, wow, there's been some selling here, a little bit of distribution there. And it's just something to look at. I mean, this thing can take a break just like anything else. If we look at gold, gold's an interesting one right now because it's got some divergences. And in terms of just kind of a pattern, we've got, this was a kind of a descending triangle that it broke through and kind of came back up. Now, typically what I found in something like this is that, if it does kind of break through and kind of suck, get people sucked in there and gets back in there, then the pattern just kind of starts over again. So this, if it can break through this level, then yeah, it's a buy. But at this point, it's just kind of sloppy. From a smaller time frame, then, we've just got, so here's a little bit of a kind of a wedge there too, and just kind of waiting to see which way that'll go. Does this work in Forex? Oh yeah, I mean, currencies are really, really big on this kind of stuff. If we look at the euro, or obviously EUR/USD, same thing. You're there and you're looking for specific patterns. Get this. So what we want to look at here is kind of start putting together, putting together kind of a plan for that. Now, a few of the other things that I like to look for, okay, if we come back here and we look at the stock screener, and under technical, we're looking at patterns and stuff like that too. But the other thing you can look for here too, I want to show is the candlestick, okay? And there's a couple of interesting patterns here. Some of these, like the the hammer, are good and things like that too. Doji, those are good. And I found though that Thinkorswim is actually a little bit better than that. If we bring up Thinkorswim, and then under patterns, you can go to select patterns, And then you can click here for candlestick, and you can say, wow, look at all those candlestick patterns, okay? And there's a lot of different ones. In terms of something like, in terms of like patterns, what you're looking for mostly here are reversals. And that's just more kind of like, for me, like for patterns, it's like, okay, it's really about wedges and different things like that. But you can go through and look through and do the same thing and kind of scan for these as well. Okay. Something I found that's useful is kind of like, 3 bars in a row. I mean, that's always kind of a positive. Different things like that. But really within the context of what we're looking at here, in terms of divergences and things like that, it's really just more about, okay, this is a wedge, this is what we're looking for here. But you could apply kind of the same thing. I mean, one thing that's really powerful in currencies is that when you see something like this, you just kind of see a big move up and then kind of a topping tail like that. That's a powerful kind of a reversal. So a couple people had asked questions on candlesticks there. All right, let's look at GDX. All right, so what are the patterns that you guys see kind of trying to develop here in GDX? And this is the part to me that's most important, is just being able to say, like, okay, there's nothing, there's no automated tool drawing for us right now. Okay, so what are we looking at here? Well, guess what? A lot of times these patterns just come back to the basics. This is a wedge. And what we're looking at on this wedge is this going to be able to break through to the upside, or is this going to continue? Okay, now, if we look at this, there's a squeeze. Momentum's going lower. You can see here in the oscillator, we've decelerated near support. Okay, and essentially, this is confirming. And when you see that this is essentially doing what the pattern is doing, it's just kind of confirming, confirming the pattern, okay? So at this point, I'm looking for this to go lower. I'm looking for this wedge to resolve itself to the downside. And there's different ways to look at that. You could play an individual mining stock, okay? Like here's GG, this is a Gold Corp. And that's a fun one to play. You can do a reverse like Dust. So Dust, the last week or two, has kind of slingshotted me around here. But you can see we're starting to get, some momentum again here too. And this is what I'd want to look at. If GDX is going to go lower, then I want to get some more exposure to this. All right, so good question. So what I want to look at is, what chart is best for identifying patterns, daily, weekly, 78-minute. It really depends on your own kind of trading goals, but in general, I like the daily patterns. The daily and the weekly are the strongest by far. The 78-minute or the intraday charts, they can get a little sloppy, but boy, a weekly pattern is super, super strong. If we come over here and we look at the dollar index here, and in terms of a pattern, if you look at this pattern, it really falls more in line with what? A descending, right? The descending triangle, which is what? Is generally bearish, okay? And so this is a good example of kind of looking at when it's like, you're kind of getting hoodwinked here. And it's like, all right, let's look at this. So here we made lower lows, yet this thing is moving higher. You see how obvious that is when it's obvious? And that's a huge red flag. So those are the things that can be very powerful. So now it's kind of like, okay, we're looking at this. We see the squeeze, the momentum. It looks like it's going to die, right? But the squeeze momentum starts working higher. This thing is taking off, okay? And all we're doing is we're just chopping around here. But you can see that it's super obvious, right? And it just means to be careful about getting too excited about the downside. So, and the good news is too, is if you've taken the other classes, like we did the SMI last week, we've done DMI explosions, these all kind of tie in together. So if we're looking at, let's see, what was one that had set up here? You know, looking at like say GDX, it's not quite, but you can see that here it's kind of when it kind of started working its way lower. That's great. You kind of get that specific kind of an entry signal, then you can kind of go back and look at the pattern and stuff like that too. So if you've taken both the classes, I mean, they tie in really well together. Yes. So we're going to look at a cup and handle pattern too. So let's look. I want to go through here. So I'm going to come back to FinViz, and let's go through. And what I want to do is look for some plays for Monday that we can potentially take. So again, the nice thing here is you can kind of scan through and you can look at the pattern. So we're looking at head and shoulders, grub, okay, and that one's already gone. That one's kind of strange. And you can see you can actually go through this fairly quickly. HBC, that's already gone. And a lot of these, and it's not surprising, a lot of these on the downside are already just taking off here because it's been a very weak market. All right, so let's come back over here. Let's look at wedge ups. Are there any wedge ups here that are pretty strong? Well, Facebook. Okay, we've already looked at Facebook. Mac, Mary Mac Pharmaceuticals, billion-dollar company, smaller company. Let's take a look at that real quick. I mean, it's kind of, it's kind of gone, but everything's confirmed on it, right? I mean, everything's confirmed. Looks good. Let's see. AGN, Goldman Sachs, interesting. LinkedIn. So LinkedIn, that's a very powerful pattern. We looked at that one. Duncan. So the nice thing is you can go through these fairly quickly and just kind of see like which ones you want to kind of look up into. And let's look at wedge. Let's do triangle ascending again, strong. Let's take a look at that. NTAP, no. CTL. Okay, CERS, healthcare. Small market cap, 381 million. Let's see, HMSY, GoGo. INSY, we looked at that one, but we had concerns, remember? And interesting. So yeah, I mean, there's a lot of, kind of sloppiness, especially with the markets last week. Another one too, like Channel Up. So a lot of the credit card companies have been doing pretty decent here. Pfizer, okay, so what's that one? $22 billion market cap. HUM, let's look at that one. Is there a way to see what type of pattern is developing on a stock in FinViz instead of a scan? Well, there are, I mean, there are different companies out there that will, they kind of focus on pattern recognition and stuff like that too. That's just kind of an easy free resource. Well, let's do this. Let's look at, I see a lot of questions about Facebook, so let's go back and just talk exactly about how to play the stock, okay? So as you're doing this then, what you're going to be looking at is how to play it, right? Now you have the pattern. And it's how do you play it? So let's look at Facebook, bullish, wedge as an example. All right. So first things first, if we're going to be playing this trade, in what context do we want to play it? Are we going to be looking at a 78-minute chart, a daily chart or a weekly chart, because depending on which one we're doing is going to designate what type of trade that we do on it. So, yeah, the 78, I would probably avoid that one. You are looking at a lot more chop. The daily is interesting, but boy, this weekly is really intriguing with the squeeze setting up. I mean, that's just something that, boy, this thing could just really kind of take off here. So what I'd like to do with this in the context of options is really look at something a little bit longer term here and not get too caught up in the short term stuff. Now, the nice thing with options is you could do a little bit of both. And what I mean by that is that you can buy, let's see. Let me get this here. And I'm just getting this there. Okay. So if we go over here then and we look at the options, and the main thing here, and of course this is an assumption here that you get kind of a working knowledge of options, but if we're looking at a weekly, chart, then, we don't want to buy options that are going to expire next week. We'd want to, at a minimum, go out to January and potentially go out to February, okay? And if we say January, at least let's start off with January and then we can kind of roll it and stuff like that too. That's fine. That's great. Then from here, I like to split this up. So you can just say, all right, great. I want to buy some in-the-money options. So we're at $78. So I'm going to buy maybe, some $75 options. Those are in the money, almost delta 70s. But when you get that weekly signal, that's also when you can say, all right, I'm going to get a little bit of out of the money options here. These delta 17s are like 61 cents. Those are the 85s. And then, from a trading perspective, if you've got $10,000 that you want to put into this trade, then put like $7,500 into the $75 calls, and then put $2,500 into the $85 calls, okay? And now you've got kind of the best of both worlds. You can capture any short-term movements, take your profits, okay, and then let this one run. And a lot of times, a big question is always like, okay, that makes sense, but how far, is this thing going to go? And a lot of times it's just a function of average true range or expected move, okay? Average true range is the easiest thing in the world to do because it applies to all markets and all time frames. So just come over here. All right, average true range, great. There it is. And if you look at this, the value of it right now is $4.26. So when you're looking at this and you're looking at kind of a breakout, a minimum upside move that you're looking at is $4, okay, and 26 cents. And by the way, from a weekly perspective, that's also where you want to put your stop loss, okay? At a minimum, you want to use 1 times the average true range, the stop loss, and if you can do more than that, that's fine. On a daily chart, I actually recommend 2 times the daily. But more importantly, you want to kind of know where you're looking at some potential, selling. So if you can get up, $4 from here, we break through this and we move up like $4, that's a good place to take some profits, okay? Get out, capture some of that revenue, and then if this thing's going to keep on going, you do it with your out-of-the-money options. So you're going back and forth here where you've actually got a situation where it's like, okay, you've got the kind of the easy targeted trade, you make your money on those in-the-money options, but if this thing's going to run like 6 weekly bars, okay, and just keep plowing through that, then you're going to take advantage of that with the weekly options. Now, the next thing is how do you use this pattern to trade weekly options? So if we go back here to Netflix, I mean, for me, Netflix is just kind of like when in doubt, sell call options. I mean, you've got kind of a, head and shoulders setting up. There's a neckline. This thing could get nasty. The weekly chart here, it's kind of confirming it. The daily chart's rolling over. But more importantly, you can see here, like on this intraday chart, you've got a wedge. Guess what? Just sell call credit spreads against that, those weekly options, especially if they're going to expire in a couple days. If you're looking at more of a directional trade, buying weekly options I think is always a little tricky with directional trades, but this is a great pattern for selling premium. And if you're a premium writer with those weekly options, because you got that fat premium, but at the same time, it's giving you, you're taking now kind of this knowledge with what's going on in terms of price action here and making it just a little bit easier, okay? So here, downward channel, you've got this triangle here, it was ascending, boom, you just sell premium on that, okay? Bigger picture, what's going on here is kind of a nasty, sloppy kind of a pattern here. You've got big, massive triangle. I mean, this thing could just get destroyed here, and I really like the pattern. So price line to the downside looks great on all time frames. No, so for divergences, I don't look at weekly squeeze momentum for divergences. So it's the formula here is just different. How did I get it to draw on there? So just go into patterns and click show patterns, select patterns. And like I said, I'm not sure why it shows on some and not others. I've been going through and I'm going to talk to support. I think part of it is just the settings and stuff in here, but it's a newer feature for them. All right, let's see. It's okay. Another pattern that I wanted to talk about here is, if you guys are familiar with cup and handle, this is made famous by Investors Business Daily, William O'Neill. This is also a powerful one. It's harder to find in scanning, but essentially it looks like this, and it works both to the upside and the downside. Is you get a price run, and then you kind of get some consolidation and pull back, and it gets close there, and then it just starts consolidating again, and then from there you typically go higher. And this part here is the cup and handle. I mean, it looks like a cup, right? And you got that nice kind of a rounded bottom, and it's very, very bullish. And everything that we've been talking about here today applies very, very well to this. We're talking squeezes, divergences, and all of that kind of stuff. So if we come back and we look at, this as kind of an example here. This was Zillow kind of back before it rolled over here, but you had this move higher and this beautiful pattern, kind of a cup and handle pattern. You had a squeeze, and as you're looking at this, you can see that it's like, wow, even when it's sloppy here, you're getting these buy signals, the oscillator saying buy. This is moving its way higher while it's consolidating here. That's super powerful. Okay, so even with these other patterns, if you're looking at pennants or anything like that, the same thing applies with these oscillators and everything like that. But let me get this. And let's see here. There was and even with newer issues and stuff like that too, it was, let's see. So the same thing kind of here. So, and again, not every time there's going to be a squeeze, but, when you see this kind of a consolidation, kind of a cup and handle, if you're looking at it like, okay, is this going to be super powerful or not? You can see as this one is forming, it's kind of like even before it breaks out, you're seeing red all over the place. I mean, there's red here before it kind of makes its break. So whether it's really good about telling you is like, okay, is this thing going to work? Or it's an early warning system telling you to be very, very cautious. Yeah, and this thing that's TLT, this monster, I mean, this, ideally what's going to happen here is this turns into the biggest cup and handle pattern on the planet, and then explodes higher. Did I say that I do not look at the squeeze as divergent signals? Correct. Yeah, for the squeeze, I'm more just kind of looking at it as momentum and not divergence. All right, so so now what I want to do is I want to take, so for those of you that are familiar with the stock scanner that we use, bring that up here. So on here, if we're looking at, now this does not scan for patterns, but now that we understand the importance of patterns, we can go through here and say, okay, what are some of these that are setting up, okay? So if this weekly continuation ones, I'm going to sort by volume again. And then let's bring up, and so where this gets more interesting then is then when you're looking at this stuff, it's like, okay, so here's some charts that are setting up. Okay, we can go through and just kind of like, let's bring up a couple of them and we can see which ones are kind of setting up here. And so Expedia, so weekly bullish continuation, right? So now we're going to come over here and say, okay, so we've got continuation. Now we want to ask ourselves is what patterns, if any, do we see? Okay, we've got this squeeze here. I mean, that's pretty good. This is great. You know, there's money kind of flowing into this. And, you know, if we're looking at this, you've got, you know, there's this kind of a, you know, it's almost like more of a potential of a reversal. Okay, so that's kind of a flag there. And right now we've got, you know, selling there, selling there. So as I'm looking at this, it's kind of like, you know, yeah, there's a squeeze and that's great. But there's a couple of, you know, warning flags here that I just want to wait. And it makes sense. I mean, the markets here have been pretty sloppy and stuff like that too. Let's see if any of the other ones are setting up as more bullish. So one here that's coming up is LinkedIn, right? So, okay, LinkedIn, great. Let's bring in an AOL. Let's look at LinkedIn and AOL. So for LinkedIn, so here's what we got as a setup. We can see here almost right away, I mean, there's a couple of patterns that are setting up here. I mean, you know, you got kind of a wedge right here. I mean, technically, you've got kind of a bigger wedge even sitting up there. It's like, okay, wedge. This thing's coming in fine. We've got a squeeze developing. And if we come over to the daily chart, you know, we've got some action going here. And, you know, we start looking at this kind of like, okay, so in the combination of the squeeze and some of the patterns that we're looking at, now it's got a little bit more interesting potential, right? And let's look at eBay. eBay came up on this too. So again, this isn't scanning for patterns, but now what we're learning to do is apply our knowledge of patterns to this. Okay, so on a weekly chart, great, we've got a squeeze. This looks fine. You know, on a pattern here, what kind of pattern is this? All right, this isn't really a powerful pattern. Oh, wait a minute. Now, if we look at a daily chart, we can see that we do have kind of a wedge setting up here. Okay, so that actually makes it a little bit more interesting. And if we look at this here, it's like, okay, this is going, this is going. The stock was, it's been holding up okay in a sloppy market. So this actually has some potential, okay? I don't like this. I mean, that's kind of sloppy. But what will happen is you start going through this stuff, the ones that'll stand out, will stand out pretty good. Now, if we look at this one, wow, this is one where it's like, okay, on the chart here, the squeeze is trying to fire long, but man, we got divergences all over the place. In fact, you could argue that this is a head and shoulders topping pattern. So this is one that I actually would look for to die, okay? And then just out of curiosity, I do want to see, because this market's been a little bit more bearish here, is let's see, because a lot of these, like crude oil and stuff like that, they've already taken a nosedive. Is there anything setting up in some of these that actually look pretty interesting? Well, let's see here. So let's look at GoGo. So GoGo's come up, and when we look at this, we can say, okay, well now that with our knowledge of patterns, we can just kind of say, oh, wow, this thing is, got that descending kind of a wedge. We've got a squeeze setting up. There's no early warning flags that it's going to go. And essentially, let's see, we've bottomed there. And since then, we've just been essentially following price action. So it's not like this is like, taking off or anything like that. So I like that. That's great. We can now use this knowledge of patterns and combine this and kind of pick which ones we want to do here. So does that make sense? So it's just kind of like a few things like that and a few tweaks that if you understand those clear patterns, they'll jump off at the page and make it a lot easier. Oh, and I can show you like how to access the scanner and stuff like that. All right, so let's look at a couple more here. Yeah, so UNG, I mean, there's not really any real interesting patterns setting up here. This is more kind of seasonal. If we look at let's see, not S. Oh, what is it? ECEZ. There we go. Okay, someone's asking about ags here. I can type it in correctly. There was one ZW. Yeah, there we go. So, you kind of got, it's like the argument here is, all right, we got a potential kind of a head and shoulders reversal here. Again, it doesn't matter what the market is. So, this happens to be grain, so there you go. During this time, you can see that, during this time right here, I mean, obviously bullish kind of action here going on. I mean, you don't want to see it trading at the lows here. And, boom, we just kind of take it out. And that's just something where, again, it doesn't matter what the market is, whether it's wheat or currencies or oil or a stock, the people that are participating in it are, based on their buying and selling, are going to form a pattern, okay? And if you see something like this, this means that there's real buying, and the chances of this breaking out are super high. If you see this forming and this is just kind of crawling along the lows here, that's kind of more of a suck-in kind of a play, right? Like what happened with oil. If we look at Jazz, I mean, this is one where you can see, this thing looked pretty good for a little bit. Weekly chart's very strong, but we're seeing a lot of divergences come in on the daily charts. So a little bit of a red flag here. We made new highs, and we got some sell signals, and then boom, from there, combination of the market, and everything just kind of took it down. So a nice kind of an early warning system on that we can pay attention to. All right. Yeah, and that's a good point. So earnings positions, I mean, earnings can ruin a chart pattern, so you always want to know when earnings are coming up. I mean, that makes a lot of sense. It is a little bit cleaner to look at like something like the spiders and just kind of say like, okay, what kind of pattern do we have setting up with the spiders? One of the obvious patterns here was, that's been setting up is you got this kind of a little bit of an ascending kind of a wedge there, and oops, get rid of that one. So you've got that ascending wedge. In this case, up here, you can see like, okay, we've got some selling here. This wasn't, there really wasn't a lot of divergences here, but you can see we started to roll over. And I mean, the stock indexes here are kind of crazy because there's so much money flowing into them. But then if you look at IWM, you'll see that it's a little bit different, where it's kind of like, okay, we've had these moves. The lower term time frames like this, we've got the squeeze setting up and looking to see if this thing can get going. So versus like TLT, where it's obvious, painfully obvious that money is just flowing into that, right? And then if we look at, let's come back here and look at the price line. Okay, so someone earlier was asking about pennants, not the pennants. So what that looks like is it's more of kind of it's also known as a flag. And that's typically a nice kind of a continuation pattern. So you've got, so right here we rally, and that's a flag. That's like a pennant, right? And as you look at this pennant forming, you just kind of come down here and go, all right, what's going on here? Oh, this thing's going higher. Guess what? That thing's going to continue. So even as you start utilizing new patterns and things like that, this all applies. It seems odd that money is flowing into bonds with interest rates so historically low. So what's going on there, Mark, is that there is actually a very big world scare going on right now, that the world could actually run into a deflationary spiral. The only economy right now, the only major economy that's not experiencing deflation and actually has a okay economy is the U.S., and that's why money is flowing into bonds. All the other countries are buying U.S. bonds, and essentially the higher bonds go, that just means that the stronger the deflationary pressures are on the world. Okay, so GILD. All right, so what stands out here, guys? So we got, I say guys and gals. So you got kind of a in shoulders, not kind of, you do. And within that, there's like a wedge and things like that too. But what you'll find is if you can identify the pattern, then it just becomes really important to come down here and say what's going on. Well, I'm looking at this as that's heading lower. From a weekly perspective, a little different. But I mean, right now there's a lot of kind of sloppiness in the market. We've seen it when it's obvious buying, right? When it's obvious buying, it's obvious buying. If it's not obvious buying, then you look for the pattern to win out. Like, this is not saying that this is trying to suck money in so they can rip it higher. This is saying that what hedge funds are trying to do here is fake people out, like let's rally this thing and suck people into it, right? And then let's kill it. Does that make sense? Does one pattern overpower another when you have multiple patterns forming? Okay, so the head and shoulders is kind of, they call it like the granddaddy of them all because it is the strongest. And also remember too that the pattern on the bigger chart always wins. So, you know, here, this is a nice uptrend, right? But we also know now that that's a bearish pattern. And if it breaks that, it's going to fall. Doesn't mean it's over, but that's going to be a pretty significant move, right? Are these patterns as effective on FX? Absolutely. So if we look here at the yen, you know, the yen here had this huge Genghis triangle setting up here, and eventually it broke. And guess what? While this triangle is happening, okay, while this triangle is happening, it's pretty clear that, you know, this is just continuing to trend lower. Okay, very, very good sign that this is going to implode. Yeah, copper. Yeah, Charles, and this is all in it'll be on the presentation too, but that's accumulation distribution by PR. That's on the platform there. So if you look at this on copper, I mean, is this a good thing or a bad thing for copper? That's actually not only a bad thing for copper, that's a bad thing for the world economy. What that is saying is that copper is going to implode, and copper is a leading indicator. If it's imploding, it means that demand is falling off of a cliff. Average house takes 400 pounds of copper, average car is 50, right? Now in the U.S., still building houses here. In other parts of the world, it's coming to a halt. Does that make sense? That's a super powerful negative pattern, and not only does it have implications for copper and any stocks that make money in copper, okay? It's actually a good indication. You know, I was talking about like how do you use this stuff to get a feel of what's going on in the world economy. This is telling you that the world economy is going to be in some deep doo-doo as we head into 2015. Let me see what else here. Yeah, FCX. So, you know, I mean, this stock deals with the copper, and it is going to have a big problem here. So it all ties in together like that. And again, the nice thing is when you see these obvious patterns, you can utilize that for obviously specific trades, but also kind of getting a feel of what's going on. All right, so let's look at a couple of other ones here. So CMG. So CMG is an amazing stock. So this is kind of a pattern that we have here. It's a pretty bullish pattern. You know, this is okay. It's going with the pattern here. If we go with a daily chart, you know, not so much. You remember, when it's obvious, it's obvious. If this thing was cruising like this, it'd be like, oh man, we got to get into this.
So that's CMG. Compare that to Facebook. So you're seeing like, wow, money is going into Facebook, money is going into Facebook. Okay, so it's obvious. For Apple, so Apple here, great company. And, you know, we've just had, this is the ascending wedge. This is like the most powerful reversal pattern. And when it breaks, it's going to go. So it's going to have to work that off. Oh my gosh, yeah, Buffalo Wild Wings. Let's see. All right, I hate to say it. What do you guys think? I just don't think that many people buy Buffalo Wings. I'm obviously wrong. Yeah, so that's super bullish. So as a workflow for this kind of stuff, all right, you know, there's different things that, you know, like to utilize and different things like that too. So how I'll look at this stuff is, first of all, I mean, the main takeaway I want you guys to kind of to look at is just understanding when something is, you know, when money is pouring into something, okay? And then from that, it's like, all right, we got a nice, very bullish ascending triangle. Okay, that's great. Now, we're not having a squeeze here. Okay, so we're not getting a squeeze, but my gosh, money is just pouring into this thing, okay? And even on Friday when the market tanked, it was up $1.50. Now, we got a squeeze on a smaller time frame, but this thing looks great. I would be all over selling put spreads on this, okay? And you can see that when this thing actually reversed, what happened, okay? Classic right here, kind of a wedge pattern there, right? So Buffalo Wild is actually a very technical stock. And yeah, they do sell a lot of beer too. Okay, Triple D. So are there any divergences in Triple D? Now, long term, do I think Triple D is going to kill it? Yes. In the short term, is more money going out of that stock or into that stock? Yeah, it's out. So what you want to look at then as you're doing this and kind of, you know, tying things together and stuff like that too, is what I like to do is just kind of look at like, okay, I'll, you know, as we're looking at a simple tool like this for patterns and stuff like that too, then you can also combine it, you know, with other things that we've looked at for one of the things that I want to look at, you know, the last class we did, we talked about stochastic, the momentum, the stochastic momentum index. Okay, so let's combine these two. Let's look at Facebook here, and if we're looking at this and say, okay, cool. I mean, right now we're not getting a, you know, not necessarily getting a buy signal here because we just couldn't get oversold enough, but we can see like, okay, you know, the average true ranges are here, and you know, there's some different things that are tying in there. And what's nice is when these do kind of tie in together, but what's going to happen here is that, you know, sometimes you'll look at this and say, okay, great, here I'm getting a stochastic buy signal. You know, is that legitimate? You know, what else can I use to kind of check that? And it's kind of like, all right, let's come over here. And, you know, that moment in time took place right here. So we know that that's a, you know, that's a nice little pattern there. We can see that money flow is here. The oscillator is fine. Okay, so here we got an SMI buy signal, and this just looks fantastic. And so what will happen is that you can actually just kind of go through and when, you know, on the different signals that you're using, okay? So if you're using a squeeze, if you're using an SMI signal, or if you're using, you know, like a DMI explosion, whatever it is, you know, and you may have your own things too, what you want to tie into it is to look at it and look at the pattern that's shaping up. Is it a bearish pattern? Is it a bullish pattern? Is it a reversal pattern? Okay, so head and shoulders. Is it a bullish or bearish head and shoulders? Is there a wedge? Okay, and that's kind of that last piece there that will make this just a little bit more powerful to use that way. All right, so good question. So from a process standpoint, is it faster to scan for patterns first and then filter against squeezes, or the other way around? So Rick, I'll do literally a little bit of both. So the stock scanner, I'll go through and I'll run squeezes like we just did, and I'll look and see, like, okay, are there some patterns setting up against it? But at the same time, it's very powerful to use something like, FinViz and look at some of the more powerful patterns, the wedges and different things like that. But either way, I'm still going to be utilizing the same tool. So if I find something that's just a pattern based on, a scan or something like that, so I'm going to bring it in here and say, okay, is there a squeeze? Is that one setting up? How is this doing? And it's kind of like, it's the idea is to run it through, you're running it through a process check of like, okay, great, Facebook looks good here. There's patterns and stuff like that too. Does that, is there anything else that's kicked off with this? Well, I'm guessing that this is going to also set up as, you have we had some buy signals there and different things like that. So the key with this, and I know you asked Trevor, is just like, wow, this could get really overwhelming. And it really is a process. Let me get this here. It's really, I don't know if I can grab that. It's like a which comes first, the chicken or the egg kind of a thing. Chicken or the egg? Do we scan for patterns, or do we utilize our setups and look for patterns within them? The answer is both. Okay, so how do you do this so it isn't overwhelming? I always like to run it through three things, okay? I utilize 3 chart setups. Pattern chart, which is what we're looking at today. It's got squeeze, acceleration, deceleration, etc. Okay, that's what we looked at today. Squeeze early. So this has squeeze, waves, moving averages. Okay. And then average true range. And the average true range is just a very simple way to say, okay, where are we in the context of this movement? So if we see something, it's like, okay, this is setting up, where, the average true range is essentially, we were talking about that as a stop loss before. But, if we're here and we get to the third average true range, that's typically a pausing point. And it's just good to know. And so what happens is stocks move within the context of their average true range. So if you think of it this way, in fact, let's just make these all daily charts, okay? So I will make okay, so we got Facebook, and then we got this one. Oops, save stays. So if we look at something like this, and we can just say like, okay, Tesla, it came up. There's a head and shoulders pattern that came up. Okay, so great. We look at this and we just want to see like, okay, where it came up as a head and shoulders, that's pretty obvious. And we're just seeing it now, and we're looking at this going like, okay, is now a good time to get into this? Well, it's like, well, we're already at 3 ATR. And here, let me get rid of this real quick. And this can be very, very quick just to kind of go through and check it off, okay? So if we come over here and say, all right, so you're going to notice what's on here, right? Now, I just always look at the squeeze. You obviously don't need to have it on every one, but that's just what I like to look at. So if we're looking at this then, and we look at Tesla and say, wow, we just found this, is this a good place to enter? Well, this is telling us it's like, okay, if we're in it, we should get out. But I mean, that's, the move's done. We're at 3 ATR, and if we look at this, the safe place to get in would be what? A move back to the mean. So the key things that you're looking at are, like the 21 EMA on this, where are you on the average true range, and then where are you in terms of a pattern, okay? And if we look at this and say, well, it's too late to get in now, but guess what? If it rallies back to resistance, cool. I'm going to look at setting that up. And if we're looking at Facebook, it's a little bit of the opposite, okay? If we link this sucker together, let's actually make that a daily chart too. So if we look at this, in this context then it's like, okay, great. Facebook came up. Everything's all cylinders here. That looks great. We've got a little bit more extra room here. Now, where do I get in? Well, the best is kind of get back, get in on a pullback here to the moving averages. So you're just kind of trying to see, like, real quick, are you too extended, or where are you in the face of it? Right now, Facebook is in a good area. Tesla, we missed it. Does that make sense? So it's a real kind of a quick way just to kind of go through and just kind of see where you are on that. Let's look at, oh yeah, no, you can get a copy of this. Let's look at LinkedIn. It's like LinkedIn's like, okay, everything looks good there. Money flow's coming in. We got some good patterns on that. In terms of upside, boy, 3 ATR, that's a long ways away. That's great. And if we look at this, we're just pushing through these key moving averages. So yeah, I mean, that's easy. It's like bam, 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 okay? So if we're going to buy this, great. Where are we going to put stops? Well, we're going to come over here and say, well, I want to be at least 2 ATR away, okay? And everything here looks very bullish. So does that make sense? Because it's like, on the one hand, you can look at all this stuff and just go, go bug-eyed. But if you've just got a simple workflow, I mean, you can look at a stock and in literally 5 seconds go yes, no, or this is where I'm going to get in. Yeah, and I'll give you a copy of this workspace. So REGN. All right, so on this pattern for REGN, what's the first thing that stands out? Okay, this is a reversal. You've got a rising wedge pattern, right? We've broken that. So based on that, it's like, all right, I know we're kind of pulling back here, but that's a pretty nasty pattern, okay? I don't want to buy this because this pattern is strong and can continue to push this lower. Yeah, selling calls, that's fine. Let's look at the indexes here. The indexes have been on a run. So, I'm not super excited about shorting the indexes on Monday. Why? Because we are, yeah, this is a bearish kind of a play. We're going to keep an eye on this and see if it kind of gets back going here. But, we're already extended here. And anytime you get too far away from the moving averages, you just kind of come right back. This is the 8 and the 21. You get too far away, you're going to come right back. This is getting too far away to the downside. So again, this is not the area to short. But now what's happening is that when you see the pattern developing, okay, you can actually start trying to make some decisions on which way it's going to go. Alta, let's look at Alta. So on Alta. So now this is one that we set a put spread on. So what do you guys think? You know, the market's pretty nasty right here. But if we look at this and say, okay, you know, here's got some patterns, here's a squeeze, wow, money's flowing in. You know, we're not 3 ATRs a little bit away. This is fine. I mean, this looks great. And again, it only takes like 4 seconds. So there's a rule there. If it takes like more than 4 seconds to kind of figure out if you should be in the trade, you probably shouldn't. Let's look at RYLP. That's the wrong symbol that I typed in. RLYP. All right, so on something like this, it's an amazing mover. Is there a pattern that's setting up right now that we could get into? The answer is no. Okay, sometimes you're just going to see a stock that's just, it's gone. And this is, you know, there was a good pattern. So there's a beautiful pattern, you know, like right there. That was fantastic. You know, if we're looking here, I mean, you got a head and shoulders reversal pattern. Okay, pretty good there, although a little sloppy. So you can see is in the context of this, and it's actually very useful with patterns, just to come back and look at them. Right? Okay, here's a wedge. Here's a wedge setting up. Oh, we're starting to get that increase going. Awesome. And now, so when you understand the context of it, you'll recognize it when it's developing. Now, is there anything here to do right here? No. I mean, that's gone. I mean, if you have it, congratulations. But yeah, there's cup and handle and stuff like that too. But so now, so you guys see that when as you start like recognizing these patterns, it just becomes a lot easier. All right, so the last piece of this is managing the trade. Okay, so if we come back here and let's look at was it Tesla? Or even let's get price line. So, you know, whether you're doing it with options or et cetera. So here, I mean, this has been a pretty manageable move here in price line. So, you know, you're kind of looking at this and going like, all right, you know, here's a wedge. You know, got the wedge here, and you know, when we see it, you know, right here, we can see like, okay, it's not making higher highs. In fact, this is kind of rolling over. This is red. So I'm gonna like sell some call spreads, but I want to buy some puts on it. Okay. All right, so when it breaks, that's great. Then, you know, how do you manage the trade from here? Because you're thinking, like, how far can this go? Well, the first thing is the rule of 6. You know, if after 6 bars, if this thing is going to work, you know, 6 bars later, 1, 2, 3, 4, 5, 6, I mean, you want this to be continuing the downward trend. Now, it's not falling off a cliff, but it's continuing the trend. That's great. And then from here, as you're looking at this going like, okay, there's a weekly squeeze, this is continuing to go down, you know, here's some prior support, here's some levels here, but you're kind of getting an estimated range, okay? And the toughest thing to do on stuff like this is, I mean, let's look at VMware, okay? So VMware, this is one that we've been in, and this one's been super fun, but also kind of hard to manage because it's kind of like, wow, this thing is just cruising, right? Boy, this is not something I'd want to get in right now, but I'm in it, so how do we manage it? Well, from something like this, a very simple thing when you have a runaway move, okay, is you can actually just trail. If it's more of a, you know, it's like more of a swing trade and stuff like that too, like a 3-bar trailing stop. When you get some momentum like this and it's really going, I'll just use a 1-bar trailing stop. So, you know, here we are here, so I'm going to go back 1 bar and say, all right, here's my stop loss. And then on Monday, I don't know what it's going to do. Maybe it was right here. I'm like, okay, now here's my stop loss. So when you're through this, now it's all about momentum. And when that momentum stops, then you'll typically slingshot it back up, okay? And then you can also look over here too, because guess what? If this oscillator turns green, and this is great because remember, this is the early warning system. When the oscillator turns green, I would just get out. And if we go back here and we look at Tesla, Tesla may go lower, but if you're managing this trade, it's like, okay, great, you catch this, 1, 2, 3, 4, 5, 6 bars, you're in, okay, let's trail that stop. Okay, here we are, great, let's trail that stop, here we are, let's trail that stop. We're not stopped out yet, but I'm like, oh, this is turning green? Just get out, that's completely fine. So you're trailing stop, and then when you see this, that's a big heads up that this thing is getting a little gone too far, too fast, and is ready to slingshot its way up. All right, does that make sense? Yeah, and again, it's very simple yet super powerful. Okay, so let's look at a couple of other ones here. So QIHU. So, pretty major. I mean, you really can't get a bigger head and shoulders top than this. And you kind of look at this, it's like, okay, we're kind of deteriorating here. And this is probably one of the better examples of hedge funds tricking people. So, hey, let's push this thing up, but in the meantime, we are selling the crap out of it because even though the stock price is going up, this is going sideways, okay? Now, what happens is sometimes people, especially, newer folks, they don't know to go all the way back and say, oh, is this thing actually setting up as a head and shoulders? Like, no, this is like, let's suck people in, and then boom, just kind of rip it down. Let's look at Baidu. So with Baidu, which is a stock that I like to trade, you had a couple things going on here. Remember, these steep uptrends, typically you're looking at a wedge here, and then kind of another wedge here. And as we're looking at the price action, we can see here that we are just rolling over, right? And that's just the kind of thing where it's just like, are you looking for this? Here's the thing, if you're looking for this to go higher, then this is going to be super strong. If it's going to fail in this case, then this is what you're going to see. Okay, yeah, so the hedge fund kind of bait setup is right down here and right here. So let's look at Apple. So Apple, now we know that this is a reversal pattern, right? So we have something like this, and it's getting narrower and narrower and narrower, narrower and narrower. And you can see that, wow, we're getting, as it's making new highs here, we are getting distribution. This thing is starting to roll over here. Okay, it's not just exploding out of the gate. And that's the kind of stuff that we want to look for. If Apple is making new highs, and this is making new highs and cruising higher, that's fine. So it's the difference between, convergence. Yeah, Baidu looks like it's going to die. Okay. If we look at Amazon, there's definitely no real bullish divergences here. I mean, it's certainly a little bit oversold, but if we're looking at this in the context of kind of a larger pattern, I love Amazon. I buy stuff on Amazon all the time, but this isn't bullish. In fact, it looks pretty nasty to me. Yeah, and so Win's gone, but again, same thing, if you're short this stock, I'd be looking to get out of it. I mean, you can see it's a little bit of divergence there, but there's nothing, if you don't have it, you can't do anything with it right now. Now, some newer stocks sometimes are a little tougher, but if we look at blah, blah, we do have a pattern here developing, pretty nice, clean pattern. So this is a descending wedge. It's bearish. Okay. As price is going down, this is going down. So it's essentially confirmed. I mean, this is one where I would be fine selling call credit spreads on this. But the idea with the way this is setting up, I mean, it's not super bearish, but that's a nice pattern, and the idea would be that this goes lower. And let's see, GoPro. Yeah, I think GoPro is just a disaster. I think Alibaba is going to do exactly what GoPro is doing. But here, I mean, yeah, look at this massive, massive descending wedge here. I mean, minimum is that this is going to come back to the breakout point is how that sets up here. And you can see there's confirmation all over the place. What do you do on this? Anytime it rallies, you sell call credit spreads. Okay? So the idea with this is that hopefully this is kind of like the last, I always call it kind of the last piece of the puzzle, is that if you understand the pattern that's setting up and, the confirmations or divergences that are setting up while the pattern is setting up, you're going to get a huge leg up on what's going on in the markets. Descending triangle. Okay, so what's the definition of a descending triangle? It's where you have it's a little bit, I mean, I can see, for the first thing you always do is just kind of like, all right, I'm going to go like this. All right, so you got a downward channel, right? So a lot of times there's going to be patterns within patterns. But you also had support over here. So patterns within patterns, but that descending triangle here, that's powerful. So are there any books that you'd recommend for further reading? Okay, so here's a couple of resources for you. So one of the things people asked about was bring up this notepad here. So I want to write all these down. So for the book, I think the best book out there in terms of if you just want to brush up on the patterns themselves is going to be Edwards and McGee. And I'll type that up here. So it's Technical Analysis of Stock Trends by Edwards and McGee. So if you want to dig more into it, that's a great resource. Oh, and someone just typed in, okay, B-U-L-K-O-W, books by Buldowski, which I have not read. Books by, a couple people were saying that. Yeah, Mastering the Trade isn't bad. Scanners, FinViz. For the ones with the squeeze, if you go to www.simplerstocks.com/scanner, that's the squeeze scanner, which is useful because squeezes are hard to find as well. Here, let me find that one. Bulkowski. Oh, it looks like Buldike. No, Bulkowski. Yeah, so simplerstocks.com, the scanner there, it's we've set it up as it's like $47 a month. I mean, it's very reasonable. It just takes a lot of data and churns it out like that. So it's a very easy one to use like that. Yeah, the scanner will actually save a ton of time. Let's see. All right, so again, the main idea here with this is that I want you guys to kind of get into the whole idea of, a lot of times, especially if you haven't looked at patterns before, if you're looking at squeezes and stuff like that and not taking patterns into account, it's going to put you at a little bit of a disadvantage. Once you take patterns into account, these become much more powerful, and then the idea is using these tools, accumulation, distribution, as well as the acceleration, deceleration, and using those tools as both confirmation and early warning systems. And suddenly it makes this, to me, I've just found that it just makes it a lot easier. Okay? In terms of managing the trade, always know, use that average true range. That's always going to be your stop loss. And when it moves and you get that, if you can get that initial 6 bars, and I'm always a fan of kind of scaling out, taking profits as it goes your way. But if you can get 6 bars, that thing typically will keep on going, and that's when you want to hold on for more of kind of a big trade like that. Yes, so these slides here, what I'm going to do is I'm going to add these slides into the presentation so you guys can get an idea, just idea of the workflow. And plus, if you have Thinkorswim, I will share those, and you'll get a piece of code where you can actually just open up those on Thinkorswim, so you'll be good to go there. Is the toss scan for the squeeze substantially different? Yeah, the reason we actually created that scan is we weren't able to get like the way we wanted it, like in TOS or TradeStation. Sometimes they do some things well, but they don't pull in other data. We like to pull in data from multiple time frames. Rika's saying, I think patterns are the missing link for me. Rika, I mean, once you really do, once you really get into patterns, it's, for me, it was always like, if I forget about them, then I'll notice my trading results kind of get a little shoddy. But if that's kind of the focus and I'm tying everything else around it, it turns it around. Yeah, and we are going to look at the last one as a candlestick pattern, is island tops and island bottoms, which I'll include too in the slide, but just so you guys know what it looks like. So there's a, where's the one I was thinking of here? There's one, oh yeah, right. I mean, the clean ones you're going to see where it's just kind of like, and they call it an island because it's kind of like the only one there. And there's one obvious one. Gosh, it stood out. Let's see. But I'll show you at least what it looks like here. Yeah, Darva. So here's the, show you what it looks like here on the slide. So these are fairly patterned. They don't present themselves very often, but when they do, they're super powerful. So if you look at this, It literally is like an island. So if there's, and it involves gaps. So if you've got an uptrend and you get this gap up, right? But then the next day it gaps. So you get the gap up, and you have this great kind of move, new highs and stuff like that in the move. But the next day it gaps down. It's essentially an island, right? And that's typically a very, very powerful reversal, and this thing's going to head lower. On the other hand, same thing here. If you've got a downtrend and then you get a gap down, okay, with a down day, and then a gap up, okay, that stays open. So you got an open gap here and an open gap here. This thing typically will bottom out and go, okay? And they're super powerful. They don't happen all the time. But when you see that happen, just beware that that actually can be one of the more powerful actual reversals. Parasite trap there. So the psychology here, and a lot of times this will happen with an upgrade, downgrade, but essentially you'll have a situation here where everybody, a lot of times you'll have news, everybody's piling in, and then it's just kind of like, the big players and stuff like that are just, this is done. They're not only using that to try to get out, but they're just dumping it the next day. And then, so for stuff like with someone is asking like, hey, how does it work kind of like with the Darvis box? And it all comes back, a lot of this stuff just has to do with wedges. So Darvis box, how that is, you're rallying and then you start to consolidate and it turns into a wedge. And then you're rallying and it starts to consolidate and it turns into a wedge. And all the Darvis boxes, if you ever read that book, How I Made $2 Million in the Stock Market, is a series of wedge patterns. And it's very bullish, and that's how good stocks move. Yeah, so good question. Can the island have more days than just one? And the answer is yes. So that's kind of like the idealized, idealized kind of a thing there, the ideal version. If you look at, it can be a multiple. Here, I'll show you an example with multiple. So if you're looking at multiples, which is fine. Oops, check that off here. So it'll be like this. So you can have, so here's the gap up, and it may come up a couple of days, then come down, and then gap back down. That's also an island reversal. Okay, so it's like an island cluster reversal, and same thing in a downtrend. The key is you get that gap. You're trading, and then you just gap up below that. And you've got, think of it as an island. You've got this island of price that's just kind of hanging out by itself. Yeah, I mean, it is kind of a game. It is one of the games hedge funds play. It's kind of like, hey, let's suck everybody in and then rip their heads off, because they know that a lot of times people don't like to, keep stops in place. So they'll get everybody excited and then rip it down. And then what will happen is the trend gets accelerated because of margin calls, and then it just rips. So it's a great way to suck people in. And yeah, there's some on Tesla and stuff like that too. One of the ones that I like, if you're a student of candlesticks, one of the ones that I like a lot is you get kind of a doji. You guys know what that pattern is? And I mean, this works for both uptrends and downtrends. And so bring that over here. And this one's a good example here. So, and this one's pretty powerful. And you can actually kind of scan for these because it's a doji. So, and how that looks is that you have the gap, okay, and then here's that kind of that doji, and then boom. Same thing this way. You got the gap. And this is great because it represents a stalemate, right? And then boom. And these are super powerful. So you just want to be able to recognize them. You can, there's ways to kind of scan for them and stuff like that too, but when you see it, it's a super powerful indicator. Okay, guys? All right, so is there anything I did not cover? Main thing was, hey, look at the patterns, how to use them with key indicators, how to look and see when the hedge funds are kind of sucking you in. Make sure, remember, look at that accumulation, all that kind of stuff. 6 bars if it's going to be a big winner. How are the wedge and triangle different? They're kind of the same. They're just, remember, the wedge and triangle, it's the different patterns, okay? A lot of these things are the same. Remember, there's support and resistance and trend lines coming together, but it's understanding, going back to the presentation, what is a potentially bullish, wedge or bearish wedge and different things like that. Yeah, so the flush was with the ascending and descending wedges, where we looked at that Apple when Apple made its all-time high and then just ripped it down, and that was the flush. And same thing on the opposite side too. You suck them in and you flush them down the toilet. Are there scanners for Forex and commodities? So there's, say, John, on FinViz, they don't have them. There are, you can run it through the patterns like on Thinkorswim. And then I'll go through too, and I'll include too, like just kind of in the resources, like any additional scanners and things like that too. Yeah, and the thing that you'll find too is, especially if you've kind of been a student of some of the other classes, this really does tie in a lot of these things together. Oh, Don. Okay, Don is just saying, hey, I asked TradeStation for the TTM squeeze indicator, and they said they didn't have it. It's in their app store. They would. Sometimes if the customer service person is newer, they may not be aware that they do in fact have it in their app store. Yeah, so that one free tool, FinViz, very, very powerful. And you might want to consider getting the premium version, which I think is like $200 a year or something like that. But yeah, it's super powerful. Oh, and good to know. Yeah, and so another service, and I use it too, stockcharts.com. But stockcharts.com, they're a pretty reasonable monthly subscription. They do have some of those tools as well. Okay. Yeah, and the replay of the class is generally available within 24 hours. And what I'm going to do is I'm going to update, I'm going to go through and update a few of the slides, get the information for the scanners or the the codes for the charts and stuff like that there too. The accumulation distribution oscillator is not on TC2000. Jim, I will copy on the slide that talks about it. I will copy exactly how it's calculated. Okay. All right. Cool deal. So what I'll be doing then is in the room and in the videos and stuff like that too is I will, what I'm going to be doing is I'm going through these charts. I'm going to be pointing out these patterns, and hopefully now it'll start making a lot more sense when they're tied in together like that. Okay. Excellent. All right, guys. Well, we're in the home stretch for the end of the year. I believe, I think the week after next is actually like Christmas. Wow, that's crazy. I am looking for the rest of the year to be volatile. And you can also, of course, use these same patterns on smaller time frame charts if you're trading a little bit quicker. But otherwise, this is the kind of stuff that, and you're going to have me talking about more and more as we're looking to see, hey, is the dollar topping out here, or, what's going on here? Now you're going to know the tools that I'll be talking about, okay? Very cool, guys. All right. If you think of anything else, of course, you can always email us at service at, well, you can do simpler options or simpler stocks. So this is simplerstocks.com, or of course service simpleroptions.com. And again, the goal will be is that you can kind of go through and if there's any of these parts that you need to relook at again, it's been recorded, all the slides are there, and we can get this thing rocking and rolling into next week. Cool, guys. All right. Have an awesome rest of the weekend, and we'll see you on Monday.